Now pay attention. Mr. Anand is an Indian citizen. A member of the crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic departing from Chennai port on 6th of June 2024. Believe it or not, Anand is leaving in this year as a crew member on an Indian ship. Foreign-bound Indian ship means an Indian ship which will be traveling through international waters to reach a port outside India. So the ship is a foreign bound ship. Foreign bound ship means that ship is going from one port in India to another port outside India. And that foreign bound ship is an Indian ship. So are you a crew member on an Indian ship? Yes. And you are an Indian citizen? Yes. And in the current year, you are leaving India as a crew member on an Indian ship. In the current year, your residency status will be determined by checking basic condition A only. What if he was leaving India? He left India last year as a crew member. So he was covered by this exception in the last year. Why? Because he left India last year as a crew member on an Indian ship. So last year's residential status would have been determined on the basis of basic condition A because he left last year. In our case, Anand is leaving in the current year. Check date 6th of June. So are you leaving India during the current previous year as a crew member? Yes. So for current previous year, residential status will be determined on the basis of basic condition A only because you are covered by exception. Yes or no? Now please pay attention. From the following details for the previous year 24-25, determine the residential status of Mr. Anand for the assessment year 20. Sir, for the assessment year or for the previous year? See, whatever details are given, no details will always be given for the previous year. Means current year. And from this detail, I will determine the residential status of this previous year, which will be applicable for the assessment year. What I am going to do? I am going to compute the total income in the assessment year 25-26, and that total income will be of the previous year 24-25, no? Previous year 24-25 means my current year only, where I will be earning the income. And the total income of this year needs to be computed in the assessment year. So in the assessment year, the total income of previous year 24-25 will be calculated. And in that total income will go, which income will not go, will depend on the residency status of 24-25 only. And to determine the residency status of 24-25, I need to check the stay of 24-25 only, no? Understanding? What will be my relevant previous year? 24-25. Residential status for 24-25 will be applicable for assessment year 25-26. But for that, I need to check the stay of 24-25 only, no? Getting my point? Come on, let's see now. Assuming that his stay in India in the last 4 years was 400 days. You are not supposed to calculate how many days stay was there in the last 4 years. They have calculated and they are saying his stay in the last 4 years was 400 days in India. This information is of no use to me because this information is used only if basic condition B is made applicable. Current year 60 days and last 4 years 365 days or more. Last 4 years 365 days or more, yes, it is 400 days. And current year 60 days or more. I don't have to check that condition only. I will check only basic condition A, that's it. If A satisfied, B need not be checked. If A not satisfied, then also B need not be checked because he is covered by exception, and in exceptional case, basic condition B is not applicable. And did I tell you to determine the stay of India of such type of individuals, a certain period is not to be included as per rule 126. The date starting from, the period starting from date of joining and ending on the date of signing off as per the continuous discharge certificate. Can I say both the dates are given? So the period starting from 6th June, ending on 9th December, this period will not be counted as your stay in India, because this is the period as per continuous discharge certificate. Exclude this period, whatever remains, that is your stay in India. Or only calculate stay in India. Did you calculate the stay? Come on, tell me, how many days stay is there for Anand? See, when the ship is leaving Chennai port, etc., I'm not worried about that. I don't have to check when the ship is leaving. I have to check the date of joining and date of signing off. That's it. Prior to date of joining, I was in India. After the date of signing off, I am in India. But from date of joining till date of signing off, I am not in India. That's it. So how many days? From this to this. Let's count. Tell me. 5 days of June, you are not in India. You are in India. Meaning that from 6th, if you are outside, from 6th June you are outside, how many days you are outside in June? Till 5 you are in India, from 6th you are outside, so from 6th till 30th, 25 days of June you are outside India. July 31 days you are outside India, August 31 days, September 30 days, October 31 days, November 30, and till 9th December you are outside India. So 9 days of December. Tell me how many days? 187 days. Starting from 6th June till 9th December. This period is not counted as stay in India. And how much is this period? 187. So out of 365, if I reduce 187, how many days are remaining? 178 days. This is the stay in India. Got it? Or you can directly also calculate April 30 days. Take on the calculator. Come on the calculator. April 30 days. May 31. And June only 5 days you will count, because from 6th you are outside India, no? June only 5 days added. Forget about June, July, August, September. From December again you are in India. So first 9 days of December, forget about it. So balance 22 days of December you are in India. So add 22 days of December. January 31 days, February 28 days, and March 31 days. Your calculator will show this much. That you have directly calculated. You just considered the stay in India. That's it. Meaning you did not consider this period. Or alternatively, 365 minus this period also will give you the same answer. Understanding, no? Now tell me, 178 days is the stay in India during the previous year 24-25? Is it more than 182 days? Is this stay more than 182 days? 182 days or more? No. Basic condition A not fulfilled. Check B. Or not to check B. Not to check. Why? Basic condition B, current year 60 days or more, last 4 years 365 days or more. Applicable or not applicable? Not applicable. Give the reason. This is basic condition C, I know. Basic condition B, I know this is the condition. But this is not applicable. Why not applicable? Give the note. And don't check. Will you check A? Yes, write A. Check A. Give your remarks. Done. Understood? Now how to present? Tell me, will B will be applicable or not applicable? Not applicable. A was applicable? Yes, but A is not getting satisfied. What will you become? Non-resident. But before calling you yourself a non-resident, check whether you are covered by 6(1)(a). Are you an Indian citizen? Yes. But they have not mentioned your total income. They are not saying that you are not liable to pay tax in a foreign country. That means they don't want to introduce the concept of deemed resident. If they would have wanted, they would have definitely given those informations over here. That means you are not a deemed resident. Understanding? So if you are not fulfilling basic condition A, applicable basic condition A, B was not applicable, A applicable, not fulfilling, you directly become non-resident because you are not satisfying the conditions of 6(1)(a) is also not applicable, no? So call yourself a non-resident. So what will be the final answer? Looking at this, what will be the residential status of Anand for this year? Anand will be treated as non-resident. And what will be the reason? Because Anand has not satisfied the applicable basic condition A. For him, B is not applicable. Why? Because he is covered by the exception. Only A is applicable, which he is not satisfying because his stay is only 178 days. Hence, we will call him non-resident. Easy, no? But how to present this? Now let's see how to present this. No need to write. I'll share this with you today. Don't worry. This black color sheet you are seeing for the first time, no? I guess. See. Illustration number 1. Now, what is the name of the assessee? Mr. Anand. What is his status? He is an individual. What is his permanent account number? We don't know. Dash. Then why are we writing? Just to make the presentation a little bit better. Always write pen and put a dash. It will never be given in the question. But just to make our presentation a little bit, sweet, cute, we write pen and then write dash. Okay. Now tell me, previous year 24-25, assessment year 25-26. What does this mean? That the residential status for previous year 24-25, which will be applicable for assessment year 25-26, we are determining the residential status for 24-25, which will be applicable in 25-26. And that is given in this table. So first column you will make for conditions. What are the conditions? Do you remember? 2 conditions. Basic condition, stay in India during the relevant previous year should be 182 days or more, and write down the basic condition B also. B condition says stay in India during the relevant previous year should be 60 days or more, and the stay in India during the last 4 previous years, that means the 4 previous years immediately preceding to the relevant previous year, is 365 days or more. Have you written this condition? Now tell me, is this condition applicable in the case of Anand? But your examiner would like to see this, that do you know the condition? If A is not fulfilled, why you have not checked B? Understanding? So write B and tell your examiner that we have not checked B. What is the reason? Because B is not applicable. Why B is not applicable? B is not applicable since Mr. Anand is an Indian citizen who is leaving India during the relevant previous year as a crew member on an Indian ship. Hence, he is covered by the exceptions. Hence, B condition is not to be checked. This is something which we know we have to write only in our language. That's it. Will you be able to write like this? Now wait. First column you will make to write conditions. Second column you will make to write actual. This is the condition which says that 182 days stay should be there. What is the actual stay? That actual figures you will write in the second column. Now you will compare the condition with actual and you will say whether the condition is satisfied or not. If satisfied, write down yes. If not satisfied, write down no. And then in the last column you will give your conclusion. Very easy. Now see the solution given there and check the solution, this one. Which one is easy? Simple, sir. Format I remember. Condition, actual, satisfied or not, conclusion. First condition I know, sir. Second condition I know. Second condition not applicable. I have written not applicable and I have given the reason same place. So that examiner does not have to go and check here and there. I have given him everything at same place, single place. Sir, basic condition A, I have written this. Actual I got from where? Actual you got from where? 178 days. No, you are writing 178 days. How did you get this 178? On calculator. You will write here in the bracket on calculator. In the bracket you will write on calculator. Or you might have copied from someone. How the examiner will come to know that 178, which is a correct amount, you have calculated it. So you'll have to show a small working note. See the working note, guys. This is the working note. And in this working note, your 178 days calculation is there. From 6th of June till 9th of December, from the date of joining till the date of signing off, this is not your stay in India. So whatever days prior to this and whatever days after this, that means April, May, June and December to March, these many days is your stay in India. I will add both of them. I will get total stay in India. This is 178. I have written here. This says 182 should be minimum stay or more. How much is your stay? 178. Is the basic condition A applicable? Yes. The only applicable basic condition A. Are you satisfying? No. What will be the status? Write down the conclusion. That's it. Sir, this period you have not included, no? You have not included this period, no? As a stay in India. Why not included? Why have you taken only this period? Why have you taken only this period? Why have you not included this period? Note for this. Please read. There is an explanation given to 6.1. In case of an Indian citizen be leaving India as a crew member on an Indian ship, foreign bound Indian ship, his period of stay in India shall not include the period prescribed in Rule 126, and that period is from date of joining to date of signing off as per continuous discharge certificate, which is given in the question, which we are not including. Hence, color, yellow color. Understanding? Easy or not? Sure, easy. Will you be able to solve more questions like this? Now, in all the questions, there will not be same case of crew member. This was the first case. Many other cases can be there, no? Somewhere you will get another exception. Somewhere you will have normal case. Somewhere you will have a special case. Somewhere it will be 6.1a. How to determine the residential status in different cases? We'll solve the maximum possible questions. Yes or no? Come on. Let's come to question number 2 now. Question number 2. Mark this question important. In your ICAI study material, whatever questions, I would feel like you have to do those questions once again. I will tell you to mark those questions important. Okay? Mark this question important. Brett Lee, an Australian cricket player, visits India for 100 days in every financial year. This has been his practice for past 10 financial years. Meaning that since the last 10 years, he is coming to India every year for a visit of 100 days. Meaning that in the current year also, he might have come for a visit of 100 days. Now tell me, Brett Lee is coming to India during the current year for a visit of 100 days. Brett Lee is an Indian citizen, no? Australian cricket player, macha. If he is an Australian cricket player, he must be an Australian citizen. So he can be a person of Indian origin, sir. But nowhere mentioned in the question. Brett Lee was born in undivided India. Any of his parents or any of his grandparents born in undivided India, such information is not given in the question. Meaning that he is neither an Indian citizen nor a person of Indian origin. Hence, even if he is coming for a visit, he will not be covered by exceptions, and neither he will be covered by a special case. Because in special case also, we cover Indian citizens and person of Indian origin only. So tell me, Brett Lee is not covered by exceptions, neither he is covered by special case. So Brett Lee is covered by normal case. And in normal case, we check basic condition A as well as basic condition B, both. Right, no? So tell me, basic condition A says that your stay in India should be 182 days or more. For Brett Lee, his stay is only 100 days. Basic condition A, satisfied or not? Not satisfied, sir. Now, will we check basic condition B? Yes. Normal basic condition? Yes. His stay in India should be 60 days or more, sir. 100 days is more than 60 only, sir. And last 4 years, his stay in India should be 365 days or more, sir. Last 4 years, 100, 100, 100, 100, 400 is more than 365, sir. Basic condition B, both the parts, part 1 as well as part 2, both satisfied, meaning that he has satisfied basic condition B and he becomes a resident. And now tell me, if he becomes a resident, will we check additional conditions? The answer is yes. To make him RNOR, yes or no? Additional condition A says that out of the last 10 previous years, he should have been a non-resident in India for at least 9 previous years. Don't you think that the way in which he became a resident in this year by satisfying basic condition B, he would be a resident in the last year also, because in the last year also he had satisfied basic condition B. What about last to last year? That year also he was a resident. What about last to last year? Sir, just like this year, he would have satisfied basic condition B in last 6 years. No, sir. Last 6 years I am saying. Because prior to that, he did not satisfy basic condition B also. Now I will make a small working note to make you all understand that what I want to tell you. Okay, please pay attention over here. See, I will write 10 previous years. Which 10 previous years? These are the 10 previous years immediately preceding to my relevant previous year. So my relevant previous year is 24-25. I will have to write 10 previous years immediately prior to this previous year. Okay, no? So come on, tell me. This is previous years 23-24, 22-23, 21-22, then 20-21, 19-20, 18-19, 17-18, then 16-17, 15-16 and 14-15. 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. 10 years I have written. Okay. Now every year he had a practice of visiting India for 100 days. So every year his stay in India was 100 days. Can I write 100 every year? Yes or no? Every year his stay was 100 days. Now tell me, during the last year, I would have checked the basic condition A as well as B, both. Just like this year, I would have determined his residential status in the last year also. So this year, residential status determined on the basis of basic condition A and B. So likewise, in the last 10 years, every year I would have checked basic condition A, basic condition B, basic condition A, basic condition B. If anyone fulfilled, he was a resident. If none of the basic condition fulfilled, he was a non-resident. Yes or no? So what I will do now, I will write down basic condition A here. Tell me, last year, what was his stay? Only 100 days. Basic condition A says that your stay should be 182 days or more. Basic condition A. Did he satisfy basic condition A last year? The answer is no. Sir, basic condition B, part 1 says that your stay should be 60 days or more. This is satisfied, sir. And part 2 says that in the last 4 years, now last 4 years, I will check from 1, 2, 3, 4. Last 4 years, the stay is 100, 400 days, no sir? So basic condition B, part 2 fulfilled. Can I say last year, just like this year, last year also, he fulfilled basic condition B and he became what? R or NR? Tell me, what was his status last year? By satisfying basic condition B, he became a resident last year. So he was a resident last year. Just like this, I will have to check the basic condition for all the 10 years, and I will have to find out the residential for status for all the 10 years. Understood, no? So tell me, 20 to 23, which year, sir? 20 to 23. Basic condition A fulfilled? No. B part 1 fulfilled? Yes. Now 4 years prior to 20 to 23, I will have to check. 4 years prior to 20 to 23, 1, 2, 3, 4. What is the total stay? Again 400. It is more than 365, meaning this also fulfilled. Here also he became what? Resident? Yes or no, sir? Likewise, every year, this not satisfied, this not satisfied, this not satisfied, this not satisfied. Everyone understanding? This satisfied, 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 this satisfied. Resident, 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 every year. Now coming to 1718. In 1718, his stay was 100 days, not more than 182. Not satisfied. More than 60, yes, this satisfied. But tell me, 4 years prior to 1718. 4 years prior to 1718, 1, 2, 3, 4. He started coming since last 10 years. Prior to that, he was not coming. So here his stay was nil only, no? So last 4 years, total is only 300. Hello, sir. Total is only 300, meaning that this condition is not fulfilled. That means here he was non-resident, and same logic for next 3 years also. This satisfied, this satisfied, this satisfied, but basic condition B part 2 will not be fulfilled. That means he will become a non-resident, non-resident. So initially when he started to come to India, no, from 1415, in the year 1415 he was a non-resident. In the year 1516 he was a non-resident. In the year 1617 and 1718 he was a non-resident. He started becoming a resident from 1819 onwards. And every year now he is satisfying basic condition B. Since then, since 1819, every year he is satisfying basic condition B, and he is becoming a resident every year. Getting my point? So tell me, do I have the residential status of last 10 years now? Last 10 years, all the 10 years or at least 9 years, you should be a non-resident. You are a non-resident in how many years? Come on, tell me. 1, 2, 3, 4 only. Additional condition A, fulfilled or not fulfilled? Not fulfilled. So you are RNOR? No. But still you have one more chance. Last 7 years, sir. Total should not be more than 729, sir. Come on, let's see last 7 years. Last 7 years. 1, 2, 3, 4, 5, 6 and 7. What is the total, sir? 700 days, which is not more than 729. He is satisfying additional condition B and he is becoming RNOR. Got it, everyone? So here, Akshaya, did you understand? Sure? So here, what will be the answer? RNOR. Sure? Now tell me, how to present this? Come on, presentation we will see. What is the name? Name is Brechtley. Individual. Pan dash. Previous year, assessment year. So, in this assessment year, for this previous year, we are determining what? Residential status. Same format. Copy paste. We will write basic condition A and B both. Why? Because in this case, both the conditions are getting applicable. Normal case, no? Not an exception. Okay? And not a special case also. So, basic condition B will be applicable and B will be normal only. Sure? So, come on. Last 10 years. Since last 10 years, he is coming to India. 100 days every year. So, this year also, he has come for 100 days. So, what is the stay in India during the current year? 100 days. Basic condition A. Fulfilled or not fulfilled? Not fulfilled, sir. Because the stay is only 100 days. Sir, basic condition B, part 1 fulfilled, sir. Because his stay is 100 days, which is more than 60 days. And last 4 years stay is 400 days, meaning more than 365. So, this part also fulfilled. Can I say basic condition B, part 1 also satisfied, part 2 also satisfied, meaning basic condition B satisfied? So he becomes a resident. Now in the same table, we'll write down additional conditions below this. Getting my point? What are the additional conditions? Do you remember? Write down those conditions. Okay. Now how you will get this? For this, we did that table, no? That is nothing but working note. Do this table. Come on, see. The same thing. My handwriting was not good there. Here, my handwriting is good. But the same thing is there. How many years he is a non-resident, sir? He is a non-resident in 4 years. So out of 10, he should be a non-resident in at least 9 years. But in our case, he is a non-resident only in 4 years. No, sir. So what I will go and write here, he is a non-resident in 4 previous year only. From where did we get it? Working note 1. So is this condition fulfilled? The answer is no. Okay. So now again come to this. I will do the total of 1, 2, 3, 4, 5, 6 and 7. I have done the 4 years total also here, and I have done the 7 years total also here. Done? So that I don't have to make separate working notes. From this working note only, every detail I will put in my format. Now just see how easy this will make. How easy your solutions will be made now. So last 7 years, 700 days are there. I will write down stay in India is 700 days during the last 7 previous years, which is less than 729, meaning this condition is fulfilled. A or B, any one additional condition fulfilled, you become RNOR. Can you present your answers like this? Sure? Sure, no? Now pay attention, pay attention. I will tell you one more thing. Now, in this question, no, they are saying that instead of Bradley, the person coming to India was an Indian citizen, Srinath. Would your answer change if instead of Bradley, the person coming to India was Srinath, who is an Indian citizen? He happens to stay outside India because he plays for Australian cricket team. So what? Playing for Australian cricket team does not make him an Australian citizen, no. It is clearly written that he is an Indian citizen, but he is staying in Australia playing for Australian cricket team. Forget about all those things. Those are the things to confuse you. Tell me, Srinath is an Indian citizen? Yes or no? Since the last 10 years, he is coming to India every year for a visit of 100 days. So this year also, Srinath has come for a visit of 100 days. So can I say Srinath is an Indian citizen? Yes. Coming to India in the current previous year for the purpose of visit? Yes. Srinath will be covered by exception. Or will not be covered by exception? Will be covered or will not be covered? Covered, no? May be covered or may not be covered. Because they have not told that what is the total income of Srinath. Ayyo, important. Have they told you that the Srinath's total income is less than equal to 15 lakhs? Because in order to cover an Indian citizen under the third exception, visit exception, you need to check that his total income should also be less than equal to 15 lakhs. Yes or no? But it is not mentioned here that how much is his total income. If they will tell you that his total income was more than 15 lakhs, then he will not be covered by this exception. He will be covered by special case. So what we will do, you know, this question will make two assumptions. First assumption, Srinath is an Indian citizen coming to India for the purpose of visit and his total income is less than equal to 15 lakhs. Meaning that he will be covered by exception. Basic condition B will not be checked. Only A will be checked, which is not satisfying because his stay is 100 days only. And B is not applicable. Srinath will become a non-resident. Hello? Now tell me, if I take another assumption that Srinath, who is an Indian citizen coming to India for the purpose of visit, his total income is more than 15 lakhs. If I take this assumption, then he will not be covered by exception, but he will be definitely covered by special case. Now if A is not fulfilled, I will check B. But B is special, sir. His stay in India should be 120 days or more in the year, and last 4 years 365 days or more. So last 4 years 365 days or more is there, but this year only 100 days is there, no, which is not more than or equal to 120 days. Special basic condition B is also not getting satisfied. Forget about A. So this assumption also will not make any difference. His residential status will remain non-resident, because here basic condition B will be applicable, but which is a special condition, that also is not satisfying. Both the assumptions or answers will be non-resident. How to present? Come on, see. Let's see the presentation. Illustration 2 only. Part B. Name of the assessee is Srinath. Okay. And assumption number 1. Total income less than equal to 15 lakhs. So Srinath, an Indian citizen coming to India for the purpose of visit, and assumption we have taken that his total income is less than equal to 15 lakhs. Accordingly, Srinath in our first assumption is covered by exception. And if he is covered by exception, basic condition B we will write, but we will say that it is not applicable. A is applicable, which is not getting satisfied because his stay is only 100 days. So he becomes a non-resident. That's it. Now the same case, we will have another assumption, that what if his total income is more than 15 lakhs? Srinath, Indian citizen coming to visit, and his total income we are assuming more than 15 lakhs. Srinath will be covered by exception? No. He will be covered by special case now. Now in special case, if he will be covered, can I say here the basic condition B will also become special? Instead of 60, see, I have written 120 and I have highlighted also. Now A, not satisfied. Sir, B is applicable, but B is also not getting satisfied. Come on, see. B part 2 is getting satisfied, but B part 1 is not satisfied. That means B is not getting satisfied. He is neither satisfying basic condition A nor satisfying basic condition B. Here also he will become a non-resident. Everyone, sir, understanding, no? So there are no working notes to be prepared over here. Done. Part B, both the ways I have solved the answer. If they would have given you the total income to be 15 lakhs or less, your answer would have been this much, this one. And if they would have given you the answer in the question, they would have given you that his total income is more than 15 lakhs, then your answer would have been this. This assumption, this you would have written as your answer. But since they have not given you that how much is the total income, it is safe that we assume both and calculate both. It will not take much of your time. Getting my point? Understanding? Hello? Sure? Okay. Now the same question will go. They are saying that would your answer be, what would be your answer if Srinath had visited India for 120 days instead of 100 days every year? Still they are not talking about the total income. See, Srinath an Indian citizen, yes. Coming to India for the purpose of visit, yes. But now they are saying that instead of 100 days, now say that he is coming to India every year for 120 days. So this year his stay is 120 days only, no? Basic condition A is still not fulfilled. B will not be applicable because we are assuming that he is covered by exceptions. By assuming his total income to be up to 15 lakhs. So B not applicable. A is applicable and A is not satisfied because his stay is still 120 days, which is not more than 182 days. He will become a non-resident. But if we assume that Srinath is an Indian citizen coming to visit and his total income is more than 15 lakhs, then he will be covered by special case. Which case? Special case. Now basic condition B will be applicable. 120 days or more. Tell me, what is the stay? 120 days, basic condition B, part 1 fulfilled. And last 4 years stay should be 365 days or more. 120, 120, 120, 120, 480. Is it more than 365? Yes. So basic condition B, special basic condition B, now he will fulfill. And he will become a resident. Now we will have to check additional conditions also, no? No need to check additional condition. If he has satisfied the special basic condition B, he will become a resident and directly he will be treated as RNOR. Now we have to present this. That's it. Come on, see. See. Illustration number 2 only, part C. What is our first assumption? That is total income does not exceed 15 lakhs. Same format. Basic condition B not applicable because we are assuming that he is covered by exception. By taking his total income, assuming his total income to be less than or equal to 15 lakhs. So basic condition B not applicable, A is applicable, which is not satisfied because his stay is only 120 days, which is less than 182 days. Hence, in this case, if we take this assumption, in this case also he is a non-resident. But if we assume that his total income is more than 15 lakhs, then he will be covered by special case, and in special case, his special basic condition B will be verified. A is not fulfilled, but B, both the parts will be fulfilled. Come on, check. Hence, special basic condition B fulfilled, he will be treated as RNOR, resident, as well as not ordinary resident. Why? Refer note below. Read the note. Come on. Akshaya, done? Understood? Just imagine such kind of questions are there in the ICAI study mat. And now what they will do? They will mix and match. Few information from this question, few information from this question, merge, and they will create a new question. But for that you need to solve all the question properly. And while solving the question, see, I am giving you the other way around also. That what if in this question this happens? What will be your answer? Okay, this is given. So our answer is this. Okay. But what if the information is twisted a little bit, and instead of this, if the institute gives you this, what will be your answer? All these possibilities you are supposed to think. But nowadays students are not thinking. So the teachers are to be thinking teachers. If I tell you all the possibilities, no, what will happen? If you will come across to such kind of questions, no, you will not find it new because you already have discussed those things with me in the class. Getting my point? Sure. Let's move ahead to our next question. Question number 3. Come on. Question number 3. Start solving. Be a Canadian citizens come to India for the first time during the previous year 2021. So he did not come to India prior to 2021. He came for the first time in 2021. During the financial year 2021, 21-22, 22-23, 23-24 and 24-25, he was in India for 55, 60, 90, 150 and 70 days respectively. Determine his residential status for the assessment year 25-26. What will be his residential status? First of all, Mr. B is a Canadian citizen, meaning not an Indian citizen. Is he a person of Indian origin coming for a visit? No. He is not a person of Indian origin also. So forget about 3 exceptions and special case. This is a normal case. In this normal case, we'll check basic condition A also, basic condition B also. 182 days or more, his stay should be there in the current previous year. Current previous year 24-25, his stay already given 70 days. Is it more than 182? No. Basic condition A not fulfilled. Basic condition B, part 1 says that 60 days or more, his stay should be there. So his stay is already 70 days, which is more than 60 days. And in the last 4 previous year, meaning 1, 2, 3, 4, his stay should be 365 days or more. If you will calculate, this will be only 355, which is less than 365 days. Meaning that even though he has fulfilled part 1 of basic condition B, but he fails to fulfill part 2 of basic condition B, hence basic condition B is also not fulfilled. Accordingly, A is not satisfied, B is not satisfied, he will be treated as non-resident. Can he be treated as a deemed resident in India? No, never, never. Because he is a Canadian citizen. Only Indian citizens can be treated as deemed resident. So don't even dare to talk about what deemed resident concept over here, because that is getting applicable only if you are a Indian citizen. Got it? So if you are not satisfying basic condition A or B, meaning you are a non-resident. That's it. Easy, no? Page number 2.37. Okay. Question number 1. Mr. Ram, an Indian citizen, left India on 22nd of September 2024, meaning our previous year he is leaving India. For the first time, meaning that prior to this year, he was always in India for full year. Understanding? And he is leaving India for the first time to work as an officer of a company in Germany. That means in the current year, he is leaving India, an Indian citizen leaving India for the purpose of employment outside India. So for this year, will he be covered by exceptions? The answer is yes. First exception. So I will now have to check only basic condition A. His stay in India should be 182 days or more. If not, I will not check basic condition B, because for him basic condition B does not apply. Okay, come on. Let's see. He was in India for April, May, June, July, August and September. How many days? 22 days. Calculate the number of days. How many number of days? How many number of days? I will do it on my own. Wait. 30, 31, 30, 31, again 31, again 22. 175 days. I will not ask you now, because looking at the answer also you are calculating wrong. What will you do? 175. Basic condition A, fulfilled or not fulfilled? Not fulfilled. B is not applicable. Status will be non-resident. That's it. Okay. Please check the solution. Third illustration was done, no? Okay. This is practice question 1. Come on. See. Practice question 1. 175. No. Not applicable. B is not applicable. A is applicable, which is not satisfying. Hence, he is a non-resident. How did you get 175? This is the calculation of 175. Done? Okay, perfect. Come to question number 2. Mr. Day, residing in US since 1990, visits India for 30 days every year. He came back to India on 1st of April 23 for permanent settlement. What will be his residential status? See, he is not coming India for the purpose of visit. He is coming India for the purpose of permanent settlement, and he is not coming in this year. He has already come last year. So last year on 1st of April, he has already come. So since then, he is in India only now. In our previous year, he is not coming. He is coming last year itself. Understanding, no? So now please pay attention. What will happen over here? That current previous year, meaning previous year 24-25, his stay in India will be entire 365 days. Because he is there in India since last year itself. So is it more than 182 days? Yes, basic condition A fulfilled. And B is applicable, but we will not check B, because no requirement. He has already satisfied basic condition B. Yes or no? Sorry, basic condition A. So by satisfying basic condition A, he will become a resident. Now I will have to check that out of the last 10 years, in how many years he is non-resident. Out of the last 10 years, in how many years he is a non-resident. For that, I will do the same calculations. You all got R or no as answer. See how your answer will change now. Last year he came for the Permanent settlement. So last year his stay was 366 days, full year. 1st April 23 to 31st March 24. Full year he was in India. And prior to that, he used to come to India every year for how many days? 30 days. Yes or no? So prior to this, his stay was 30, 30, 30, 30, 30, 30, 30, 30 and 30 every year. Yes or no? Now tell me, basic condition A fulfilled here. We did not check B. So last year also, full year he was there in India, he became a resident only in last year. Every year prior to that, he did not satisfy basic condition A as well as B. In none of the years. In none of the years, he satisfied basic condition A as well as basic condition B because his stay was only 30 days. So for all these years, he was a non-resident. Do we have a status for last 10 years now? Out of 10, for 9 years, he is a non-resident, guys. And for 9 years he is a non-resident, that means additional condition A fulfilled and he becomes a non-resident. RNOR. And also for the last 7 years, his stay does not exceed 729. Wait, 1, 2, 3, 4, 5, 6 and 7. Tell me, what is the total? 30 into 6 plus 366. Total will be 546 days only in the last 7 years, which is less than 729. Forget about any one additional condition. Bloody is fulfilling both the additional conditions. He is a non-resident in 9 previous years also out of last 10 previous years. And his stay also during the last 7 years is not more than 729 days. So how come he is ROR? Status is RNOR. Illustration number 4. The business of HUF is transacted from Australia. All the policy decisions are taken there only. What is the residential status of this HUF? Come on, tell me. Non-resident. Simple. Because they have told that all the policy decisions are being taken from Australia only. So what is the residential status of HUF? Non-resident. But if they would have told you that all the policy decisions are taken from India only, then resident. Partly from India, partly from Australia, then also resident. Then we would have seen the additional condition satisfied by Karta or not. Getting my point? Everyone. So what will be the residential status of HUF here? Non-resident. Done. Now they are saying Mr. E is the Karta of the HUF who was born in Kolkata. That means he happens to be an Indian citizen by birth. Okay. Visits India during the previous year 24-25 after 15 years. Meaning that even though he was born in Kolkata, he resides in Australia only. And since last 15 years, he has not visited India. After 15 years, he is coming to India for the first time. After 15 years. So last 15 years, his stay in India was 0 days. Yes or no? And this year, after 15 years, this year he is coming to India on 1st of April 2024 and leaves for Australia on 1st of December 2024. Determine the residential status of Mr. E and HUF. So HUF residential status we have already determined that HUF is non-resident. Now we are supposed to determine the residential status of individual. Karta of the HUF is individual. So his individual residential status also we have to determine. Okay. So what will be the residential status of Mr. E? He is coming to India on 1st of April and leaving on 1st of December. So can I say he is there in India from 1st April till 1st of December? So if we count the number of days will be 245 days. How, sir? April 30 days, May 31, June 30, July 31, August 31, September 30, October 31, November 30 and December 1 day. because on 1st December he is leaving. Yes or no? So total, if you will see, it will be 245 days. So what is the stay of Mr. E in India during the relevant previous year? 245 days. Is it more than 182 days? Yes. And basic condition B, by the way, is not applicable also, because he is an Indian citizen who was already outside India, might be coming for a visit. This is his visit only. And assuming that his total income was less than equal to 15 lakhs, he is covered by exception also. B is not applicable. Anyways, we are not supposed to see B because A he is already fulfilling. Because his stay in India is 245 days, which is more than 182 days. By satisfying basic condition A, he becomes what? Resident. Now, ordinary or not ordinary? For that, we'll have to check additional conditions for Karta. Additional conditions for Mr. E, we will check now. Last 10 years, his stay is 00000. All the 10 years, he is a non-resident. Last 7 years, what is the total stay? 0. Both the additional conditions fulfilled. He becomes a resident, but not ordinary resident for himself. Understanding? So, Mr. E's personal residential status as an individual we have determined. Now, Mr. E happens to be the Karta of the HUF, and HUF is a non-resident. So, forget about it. But what if the HUF status was resident? Karta has fulfilled additional conditions for himself? Yes or no? So, from the point of view of HUF also, Karta has satisfied additional condition. So, for HUF, his Karta is a non-resident in last 10 years. Yes or no? And his stay is also less than 729 days. So, HUF in that case will also become RNOR. But that we will see only if HUF becomes resident. In our case, HUF is not resident, hence we are not checking that. HUF is what? Non-resident. Got it? And Mr. E, his own personal residential status we have checked separately. As an individual, what is his residential status? For HUF, residential status is this. But if HUF also becomes what? Resident, so additional conditions will be checked for Karta only. Got it? Everyone? Hello? Done? Should I move ahead? You want to see the solution? Please check the solution. Illustration number 4. See, this is Mr. E. Residential status of Mr. E. What is his stay in India? 245 days. How it is calculated? He came to India for 1st of April and he left on 1st of December. So his stay in India is 245 days. Very easy to calculate. Okay. So 245 days, basic condition A fulfilled, he becomes a resident. No need to write B also. B you will write only if A is not fulfilled. And B is applicable also. Yes or no? Now check. Additional condition. Last 10 years, all the 10 years he is a non-resident. Last 7 years, his stay is nil only. So additional condition A as well as additional condition B, both the additional condition is satisfying. Bloody, he has to satisfy only one to become what? RNOR. He is satisfying both. So definitely double RNOR. Getting my point? So please check this part. Previous year 24-24 is our year. In this year, what is the stay? 245. 10 years prior to this. 10 years prior to this. Previous year 23-24. Previous year 22-23. Every year his stay was 0 only, no? Why to calculate, why to take previous year 23-24? See, forget about this word previous year first. 24-25 for this year, I am determining the residential status. So what is the stay in 24-25? 245 days. Basic condition is fulfilled. Resident. Now check last 10 years. So last 10 years, what 10 years? 24-25 current year. Last 10 years will be 23-24, 22-23, 21-22 like this. So I am not supposed to take any number of days from past years for my current year. Getting my point? Twenty-four, 25 we have already checked. No, this is for 24, 25 only. No, we are doing. This is for what year? This is for 24, 25 we are doing. And they are not telling you to determine the residential status for 23, 24. They are telling you to determine 24, 25 only. But for that, sometimes we have to go and look in the past also. That what was his residential status in last 10 years. Getting my point? What was his stay in the last 7 years? Got it? ICAI study mat. Everyone. Illustration number 5. Okay. Shall I start? Okay. See. From the following particulars of incomes furnished by Mr. Anirudh pertaining to the year ended 31st March 2025. Year ended 31st March 2025 means what? The details are given for 24-25. Meaning previous year 24-25, the details are given. From these incomes which he has earned in the previous year 24-25, you are supposed to say that what is his total income. You are supposed to compute his total income. Okay. Assuming that his residential status is ROR, RNOR and NR. It can be any of the three. But what if his residential status is ROR? How many incomes will be included in the computation of total income? And from that, what will be his total income? Now assume that his status is RNOR. How many incomes will be included? And from that, calculate his total income. Now assume the status to be non-resident. Which incomes will be included? And from that, calculate the total income. Wait, incomes are same, but the residential status are different. So for each residential status, it is not necessary, no, that all the incomes will be taxable for all the types of residential status. For ROR, all the incomes, global incomes will be taken. For RNOR, if his status happens to be RNOR, we will take only which incomes? Indian incomes and foreign income part A we will take only. But if his status happens to be non-resident, out of all these incomes, we'll take only Indian incomes. We'll forget about the foreign incomes. Yes or no? So incomes are same. So our format will be made like, we will write down the name of the assessee. Mr. Aniruddha. Individual. PAN. Previous year 24-25, assessment year 25-26. And we will write down computation of total income. Yes or no? Now what we will do, we will prepare a format. In that first column will be for particulars. In that column we will write all the incomes. What we are supposed to do, we are supposed to copy this income and paste there. Same as it is income, we are supposed to take the income and write in the particulars column. Now we have to see that if this income is earned by Anirudh being ROR, whether that income will be taxable. If taxable, then we will make 3 columns. If Anirudh is ROR, RNOR and NR, 3 more columns. So one particulars column will be made and 3 more columns, ROR, RNOR and NR. Understanding? Now tell me, first income which he is earning. Short-term capital gain on sale of shares of an Indian company received in Germany. Wait, shares of which company? Shares means your asset, capital asset. Any type of asset is a capital asset. Okay, no? So shares is your capital asset. Shares of Indian company will be situated in India because the company is situated in India. Meaning, can I say that this is a capital asset which is situated in India, and this capital asset is sold. transfer of a capital asset situated in India, sale of capital asset situated in India, and the income on such sale, income of such transfer is received outside India. See, it is received in Germany. Do you remember that in point number 1, A, B, C we did? This is C point of section number 9. Point number 1, C part we did. Any income from sale of a capital asset situated in India, even if received outside India, will be covered by section number 9, deemed to accrue or arise in India. Will it become your Indian income? Yes or no? So what you will do? Tick, tick, tick. So if his status is R-OR, then also 15,000 taxable. If his status is RNOR, then also 15,000 taxable. And if his status is NR, then also 15,000 taxable. Can you see the solution below this? Check in that solution. 15, 15, 15. Written like that or not? Yes or no? Now wait. In your solution, no, here, why have you taxed 15, 15 for all of them? Can you just give a small explanation besides this? So you will not have to write down long notes and all. Understanding? Because this income is covered by section 9, no. This is deemed to accrue or arise in India as per section 9, no. Hence it is becoming Indian income, hence it is taxable for all. So do one thing, there only in your study mat, write down, make a bracket over here and write down, it is deemed to accrue or arise in India under section 9. The moment you will write it, no, the examiner will understand that, okay, student is saying this is Indian income, hence he is taxed for all the 3 residential status. Getting my point, everyone? So for every income, you are always supposed to put the logic in this bracket then and there with that income only. Then you will not have to, write down such kind of notes and all. Getting my point, everyone? Sure. First income is done. Now come to the second income. Dividend from Japanese company received in Japan. Tell me, where is the company? Japan. So Japanese companies shares you have bought. Shares will be in Japan because the company is in Japan. So on those shares, whatever dividend gets accrued, can I say that is accruing outside India? Yes or no? And accruing outside India as well as receiving outside India. See, received in Japan. Accrual happening outside India, receipt also happening outside India. Tell me, is it your Indian income or a foreign income? Foreign income. Part A or part B? Part B. So part B, foreign income, what we do? Tick, cross, cross. So only in ROR column you will write down 10,000, RNOR, NR you will write down dash, dash. That's it. Check the solution. Same thing done. But in the bracket, what we will write here? Come on, tell me. You all tell me what we will write in the bracket. Accrued as well as received outside India. That's it. Hence, it is a foreign income. Examiner will understand that it is not from a business or profession situated outside India but controlled from India. Hence, you have taxed it only for ROR. That's it. Understanding? So, what you will write here? Accrued and received outside India in the bracket. In all the questions, you are supposed to do like this, okay? No? I am doing it for the first question so that you understand what is to be done. But in all the questions, you are supposed to write it like this. Sure? Okay. Easy, no? Or difficult? No. Made easy. Say thank you. Okay. Rent from property in London. Wait. Where is the property? Property is in London. So from that property, you are receiving rent. Please highlight this word, rent. Please highlight this word, rent. Now, why I have told you to highlight, I'll make you understand. But wait, let us read that part. Rent from property in London. Property is in London and that property is giving you rent. Tell me, rent is accrued outside India. Now your tenant is depositing that rent in the bank account outside India. So that means for you the rent is coming in your control for the first time the moment it was deposited there outside India. So if it is coming in your control for the first time outside India, meaning that you have received it outside India, then later on whatever happens now is merely a remittance where the rent was accrued outside India. Where it is coming in your control for the first time, meaning where it is received outside India. Which income? Indian income or foreign income? Foreign income. Part A or part B? Part B. So what we will do? We will do take cross, cross. Now wait, please pay attention. Can I say that if you are ROR, then this income will be included in the computation of your total income? Now, when you will bring this rent in the computation of your total income, no? So you will have to bring this rent under a head. Which head you will classify this rent? Salary head, PGBP head, capital gain head, or house property head? This is your house property income, yes or no? So whenever you classify any income under house property head, under the house property head, from this rental income, you get a standard deduction of 30%. What you get? Standard deduction of 30%. So from this rent, take 30% standard deduction. Whatever remains now, that will be income from your house property head. And by the way, in the computation of your total income, no, income from house property head is charged to tax. And they are telling you to compute what? Total income. So in the computation of your total income, will you show house property head income? Yes. To calculate that house property head, first you will have to bring rent under house property head, take the 30% standard deduction, and after computing house property head, that house property head income will go to computation of your total income, will be included in the computation of your total income. Getting my point? So rent you will bring to house property head. Then out of that rent, you will take a standard deduction of 30%. How much remains? 75,000 minus 30%. You will get 52,500. Only 52,500 will be treated as your house property head income, computed. And whatever house property head computed income will be there, along with all the other heads computed income. Yes or no? All those will be taken together to calculate your total income. And they are telling you to calculate total income. Understanding? So what you will do? You will charge this rent in the hands of ROR only, under the head house property. But to calculate total income under the head house property, this rent will be taxed after 30% standard deduction. Yes or no? Sure. Whenever rent is written, you are supposed to do like this only. Whenever rent is written. But now please pay attention. Very important discussion which will come in the next question itself. But wait, I will not discuss it right now. When next question will come, no, similar thing is going to come there. But did you understand whatever we have discussed so far? Sure, no? Okay, come on. So please check. This is 52,000. Can I say the logic for its taxability is the same which we did for the earlier thing? Copy paste. Hello, sir. Accrued and received outside India, hence taxable only for ROR, but we have not taxed it fully because it was rent. We have taken 30% standard deduction, and after taking standard deduction, whatever house property head income is there, only that is included in the computation of total income. Yes or no? And see, the calculation of 52,500 is given below. We are not supposed to do like this. That calculation also you show here only. Okay. Open one more bracket over here and write down 75,000 minus 30%. That's it. You are not supposed to make that note also which is given below. you will get the full marks. So I'm saving your time like this. Okay. Next one, dividend. Now you are getting dividend from RP Limited, an Indian company. Now tell me, are they telling you that this dividend is received outside India? If they would have told you that this dividend is received outside India, then section 9, deemed to accrue or arise in India. Then also Indian income. But since they are not telling you, I will consider as if this dividend is received in India. So company is Indian company, dividend accruing from India and also received in India. Hello, which type of income is this? Indian income. No need to deem also. Getting my point? So Indian income, what do we do? Take and take. So it will be taxable for all. Can you see 6,000, 6,000, 6,000? And below, besides this, you will write down what? Accrued and received in India. Hence, it will become Indian income. You will never write these words in the exam. Indian income, foreign income. I will come in the exam hall, give you a slap there only. Don't write these words. These words we are using for the sake of our class only, in order to understand. Getting my point? In the exam, you will get marks only if you are writing down these things. Sure? Next one, last one. I told you that if you earn any agricultural income from a land which is situated in India, is that agricultural income taxable or fully exempt? Fully exempt. Exempt for all, no? So ROR also not taxable, RNR also not taxable, NR also not taxable. Cross, cross, cross. Why? Because this is fully exempt under section 10(1). So in your answer, can you write down here in the bracket? Write down fully exempt under section 10 subsection 1. So it is nowhere written that it will be exempt only if you are ROR or you are RNOR. It is exempt for all. Sure? Now, have you written all the amounts in all the columns? Make the total, you are getting total income. That's it. Very difficult question, no sir? Likewise, many questions will come. Okay. Now, what they can do, they can twist here. They can put the incomes differently, sometimes deemed to received in India, sometimes deemed to accrue in India, sometimes received outside India. Likewise, they will play with you. That's it. Sure. So one question will give you a little bit confidence. Now we are solving more questions so that the confidence increases. Yes or no? Okay. Next question, come to illustration number 6. Yes, friends. Illustration number 6. Everyone, shall we begin? Okay. Mr. David, an Indian citizen, aged 40 years. Meaning that he is not a senior citizen. His age is 40 years only. Okay. He is a government employee. Who is he? David is a government employee. First of all, few important things which we are supposed to highlight. David is an Indian citizen. He is a government employee and he is serving in the Ministry of External Affairs. Serving in the Ministry of External Affairs, left India for the first time on 31st March 2024. Meaning in this year, 24-25, 31st March he is leaving? No, he is leaving in the year 23-24. On 31st March 24 he is leaving. That means he already left in previous year 23-24. And in the previous year 23-24 he left India for the first time. And in that year he is leaving India for the purpose of employment. He is not leaving India in 24-25. He is leaving India in 23-24 for the purpose of employment. In that year he was covered by exception. Employment exception. Do you remember? Now, David is an Indian citizen. Last year only he went outside India. This year in 24-25 he has not come to India only. He did not visit India during the year 24-25. So in our previous year 24-25, he did not visit only India. So tell me, what will be the stay of David in India in my previous year? 0. And if his stay in India is 0, will he satisfy any of the basic conditions in my previous year? No. Both the basic conditions he will not satisfy. That means David for my previous year will become non-resident. Yes or no? So did you identify the residency status of David? Now based on this residency status, whatever income David has earned for this year, the details are given. Getting my point? Now tell me whether these incomes for non-resident will be taxable in India or not. He is receiving salary over there. Don't you think an Indian citizen receiving salary outside India for rendering services outside India from the government, this is section 9, deemed to accrue or arise in India? So this will be tick, 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 because this is covered in section number 9. Yes or no, sir? Now, he is receiving foreign allowance also. Wait. I will not do 3 ticks. See the screen, everyone. First gone. ROR gone. RNOR also gone. What is remaining? This is the tick for non-resident. What is his status? Non-resident. Even if he is non-resident, this salary is taxable for him in India. So we will not consider all the 3 ticks. We will consider the last tick. Last tick stands for non-resident, and his status also is non-resident. No. So considering the fact that he is a non-resident, we are supposed to say that whether these incomes are taxable for him in India or not. Whatever Indian incomes he will earn will always be taxable. But whatever foreign incomes, whether part A or part B, will not be taxable for him. Yes or no? So is this his Indian income? Yes. So even if his status is non-resident, can I say this will be taxable for him? Sure, sir. Now second income, foreign allowance he is earning. Foreign allowance. Do you remember 10 subsection 7? Fully exempt. Exempt for all, no? So even if his status is NR, it will not be taxable for him, since this exempt itself is, this income itself is exempt. Sure? So this will not be taxable for him because this is fully exempt under section 10(7). Interest on fixed deposit from bank in India. Oh my God, bank is in India. And from that bank, in that bank you have kept FD. And from that FD, if you are earning interest, can I say interest is accrued in India? Are they saying that this interest was received outside India? Meaning that if the bank account is in India, in that bank FD, you are earning interest. If nothing mentioned that interest is also received also in India, no? What if it was received outside India? Still, it is Indian income only, because the bank account FD is in India. That's it. Income is accruing from India. Getting my point? So if income is accrued in India, it is an Indian income taxable for ROR also, RNOR also, and NR also. He is NR. So this income will be taxable for him. Yes or no? Interest from agriculture in Nepal. In the entire world, you are doing agricultural income and that agricultural income is exempt. No. The agricultural income from a land which is situated in India, only that is exempt. Any other agricultural income, that means the land is situated in any other country, from that land if you are earning agricultural income, that is not exempt, that is taxable. Hello. So is it a taxable income? Yes. But will this taxable income be taxed for David? Only if it is received in India. Is it received in India? No. So income is accrued outside India. Nothing mentioned, received outside India. So even if it is taxable, it will not be taxable for David, because the status is non-resident, and for non-resident, this foreign income is not taxable in India. Getting my point, everyone? So this is, can I say, this is section 9, deemed to accrue or arise in India. This is section 10(7), interest on fixed deposit. Can I say this is accrued and received in India. I'm talking about point number 3. Okay. Now I'm talking about point number 4. This is accrued and received. Where? Outside India. So this is a foreign income because the land was outside India. From that land, whatever income is arising, that is income arising outside India. And if nothing is mentioned, it is also received outside India. Foreign income will be treated as received in India only if it is given in the question. Yes or no? So if they are not saying that this income was received in India, it has to be received outside India, no? Hello, sir. So tell me, taxable for all or only ROR? ROR. If your status is RNOR, then not taxable. NR, then not taxable. Your status is NR, it is not taxable for you. Yes or no? Next one. Income from house property in Nepal. Again the same thing. Same thing. Property is Nepal, outside India. Nepal, by the way, is not in India. Huh? Many people consider Nepal as India, though it is India only. But it is not India, different country. So different country, your property is situated. From that property, rent is earned, income is earned, income accrued outside India. Nothing mentioned. So received also outside India. Which income? Foreign income. Part A or part B? Part B. Part B, foreign income taxable for only ROR. RNOR not taxable. David, NR not taxable. Yes or no? So this will not be taxable only. So can you write down accrued and received outside India? Yes. Now tell me, out of all the incomes which David was earning in the previous year 24-25, based on his residential status of 24-25, which was non-resident, which incomes are taxable for him? Only two incomes, 5 lakhs and 1 lakhs. Now can you see 5 lakhs? Besides that, computed, it is written computed. Yes or no? What is this computed? Computed means whenever you earn salary, no, that salary is taxable. And if that salary is taxable, we have to tax it under the head salary. So when I consider my salary income under the salary head, so to calculate the compute this salary head income, I will have to take deductions also. And out of them, standard deduction is given there also under salary head. If you follow 115 BSc, then 50,000 standard deduction. Sorry, 75,000 standard deduction. And if you don't follow 115 BSc, you know na, default tax scheme, I told you. So if you follow default tax scheme, you will get 75,000 standard deduction from your salary income. Then the salary head income will be computed. And if you don't follow 115 BSc, then from your salary head, in your salary head, you will get a standard deduction that is only 50,000. See, this after taking standard deduction, whatever salary remains, no, that is salary head computed income, that will be considered to calculate your total income. Only the computed salary income, yes or no? So if they would have not mentioned computed here, no, what I would have done, you know, I would have separately taken standard deduction. And after taking standard deduction, the salary would have been taxed, computed salary to calculate total income. But since they have already given computed, meaning that whatever standard deduction which was supposed to be taken, 50,000 or 75,000 is already taken. After taking standard deduction only, they are giving me this amount. Yes or no? So please write it down over here. Please write it down here. If salary received, if salary is given and it is not a computed salary, then take standard deduction from that salary. And how much standard deduction will be taken? Come on, tell me. Standard deduction can be either 50,000 or it can be taken as 75,000 also. 50,000 you will take if you don't follow 115 BAC, yes or no? And if you follow 115 BAC, then you will take a standard deduction of 75,000. But since they are saying that it is a computed salary, that means they have already taken what? Standard deduction. They have taken. So we are not again supposed to take it. Getting my point? Hence entire 5 lakhs we are going to tax, which they have already taxed. And which other income is taxed? Interest income. 1 lakh rupees interest income, 5 lakh rupees salary income. What is his total income? 6 lakh rupees. That's it. All the other incomes you write. Besides that, you write what? The logic and write down dash dash dash. Whatever remains, whatever total is there, 6 lakh, that is your total income. You are not supposed to present your answer like this, okay? You are not supposed to write down all these things. Simple. Write down Mr. David, individual, PAN dash, previous year 24-25, assessment year 25-26, computation of total income, that's it. Prepare 2 columns now, that's it. One particulars and one amount column. And see, when you'll write the David, no, besides that, when you'll write individual, no, besides individual only you write non-resident. Now the calculation of David is done as if he is a non-resident. Getting my point? But how did you get non-resident? For that, write down a small note that since David, who is an Indian citizen, who is already outside India, did not come for a single day during the previous year 24-25 in India, hence his status is non-resident. So first of all, wait, what I will do, I will give you a proper framework. When you will be solving this question at home, no today, you will use this framework only. Entire question is solved. Now it is just a matter of presenting the things. Sure, no, friends? See, what you will write? Since Mr. David, comma, an Indian citizen who was in Canada, he was in Canada, no? Yes or no? He was in Canada, no? Please check. He left India last year for taking up employment in Ministry of External Affairs in Canada. So he was in Canada since last year. So who was in Canada, comma, did not come to India during the relevant previous year. So what is the relevant previous year here? During the previous year 24-25. Hence, his residential status for the previous year 24-25 shall be non-resident as he fails to satisfy both basic conditions of section 6.1. Okay. So this is the basic thing which you are supposed to write. Residential status done. You are not supposed to make that entire format and all. Hello. Sometimes you can determine your residential status like this also. Done. Now, what you will do here? Now you will say Mr. David, who is individual, non-resident, having this permanent account number for the previous year 24-25 in the assessment year 25-26. In the assessment year 25-26 for the previous year 24-25, we are computing what? Computing his total income. Computation of total income. Now what I will do? I will write down particulars and I will write down amount. First thing, someone tell me first thing, what I will write? I will write down salary. In the bracket, I will write down deemed to accrue or arise in India. Under section 9, I will write down amount 5 lakhs. Hello, sir. Sure? Second point. What is the second income? Go and see. What is the second income? Second income is foreign allowance. So in the particulars, I'll write down foreign allowance. In the bracket, I will write down fully exempt. Under section 10(7) dash. Done. Then what is the third income common? Interest on fixed deposits from bank in India. I will write down here point number 3, interest from fixed deposit, and then bracket accrued and received in India, amount column 1 lakh. Hello. Besides salary, you will write down computed, and then write down 5 lakhs. But if it was not computed, from 5 lakhs, give a standard deduction, either 50,000 or 75,000 as the case may be, which we have already seen. Hello, sir. Sure? Next one, write down the fourth income, write down the logic, write down the fifth income, write down the logic. Hello? In the bracket itself. Now make a total, you will get the total income. See, the answer should be this much easy, and how the answer should be is presented over there. You will get full marks if you present like this. No need to do all such bullshits, everyone. Understood? Should I move ahead? Shall we start doing the next question now? Will you be able to complete that question like this? Okay? Perfect. Very good. Come on. Now let's come to our next illustration. The next illustration is 7th. See, these kind of small illustrations, they will ask you in the exam for 2 marks, MCQs. Or it can be asked as a part of your main question as an adjustment. So you have to be very careful if these kind of questions are there. Okay, no? See, these questions appears to be very small. But if you try to read the questions and understand such questions, sometimes it becomes very difficult for us to understand that bloody what is happening here. So first of all, let's understand the question and then we'll crack the answer also. Okay, no? Well, Miss Vivita paid a sum of $5,000 to Mr. Kulshekara, a management consultant practicing in Colombo. Colombo is in Sri Lanka, everyone. Sri Lanka is not India. See, although in Indian map, it comes as what? Bonus. Whenever we go and buy Indian map, no. In Indian map, Sri Lanka comes as a bonus below India. Have you seen Indian map? Map of India, no. Below that a small island, Sri Lanka, that comes as a bonus. But that is not India. That is a separate country. Sure, no? So in Sri Lanka, Colombo is there. So Mr. Kulsekara is a management consultant from Colombo. And they are saying he is specializing in project financing. So he is a management consultant. His specialization is project financing. Now, Miss Vivita is paying him $5,000. The payment was made in Colombo. That means he received this income outside India. So who is the assessee? Mr. Kulsekara. He is receiving income. His income is received outside India. Understanding? Now, Miss Kulsekara is non-resident also. A non-resident earning, receiving income outside India. Will it be his foreign income or Indian income? Depends that for what purpose he is earning this income. Now see, he is earning this income because he gave some management consultancy to Vivita. For Vivita's project in India, which has Ceylonese connection. Ceylonese connection means what? Do you know Ceylon is also a town, also a city in Sri Lanka. So Vivita has a project in India. This project has some connection with Sri Lanka. But wait, this project has some connection in Sri Lanka will not affect my interpretation. They're trying to deliberately put you in trouble. Indian project having a Ceylonese connection, meaning having a connection in Sri Lanka. Project has a connection in Sri Lanka. Whatever it is, but for this project only you took the services of Kulshekara, no? So Kulshekara gave you what? Services, management consultancy services for a project, for a business in India. And for that he is getting what? Fees outside India. Can I say it is deemed to accrue or arise in India? Because it is coming from resident. Vivita is a resident giving this income. Section number 9, classic example. See what I have done here. Miss Vivita is paying Kulsekara, who is non-resident. Okay, what payment is she is making? 5,000 US dollar, and that payment made outside India, Sri Lanka. But that payment is for Kulsekara is giving consultancy for project in India. So if the consultancy for a project is given in India to a resident, and from the resident, if you are getting money outside India, that is always deemed to accrue or arise in India. No? Hello? But money coming from Vivita would not be deemed to accrue or arise in India if the money given by the resident Vivita to you was for a project outside India. Then it was not deemed to accrue or arise in India. Getting my point? So Vivita, nothing is mentioned. Then Vivita, we will assume her to be what? Resident. So think from the point of view of Kulsekara. Kulsekara is an assessee receiving money, receiving income outside India. But this income which he is receiving outside India is for providing his services for a project in India. Can I say that is income? Wait, deemed to accrue or arise in India? It is income deemed to accrue or arise in India for Kulsekara. Make this diagram near this illustration 7 so that you will understand. Now for Kulsekara, if this income is covered by section 9, meaning this is Indian income, no? So even if Kulsekara's residential status is non-resident, come on, tell me, will it be taxable for him in India? The answer is yes. It is his Indian income. He'll have to pay tax on this income. $5,000 is his Indian income. Converted into INR, then on that he'll have to pay tax in India. Sure, everyone? Done, everyone? How was this question? Easy, no? In the exam, no? If you'll make this diagram and write a small note below this, what note you are supposed to write? Since the income of $5,000 received by Kulasekara being a non-resident outside India is covered by section number 9, this income, comma, this income will be taxable for Mr. Kulasekara or to be included in his total income in India. That's it, full stop. That will be sufficient. You will get full marks. No need to write down this story and all. Getting my point? Just imagine how the things are easy and how institute is making it complicated. Just imagine if some student, that poor fellow, is not having some guidance and he has picked up this ICAI study mat and doing the stuff directly from here. He will not understand. Things are complicated, but they can be presented easily also, no? So easy presentation is there, then why to complicate the things? Sure? Shall we move ahead? Next question. Illustration number 8. Mark this question important, everyone. Okay. Now in this question, they are telling you to compute the total income in the hands of individual aged 35 years. Being a resident and ordinary resident, resident but not ordinary resident, and non-resident. Meaning that whoever is earning this income is an individual whose age is 35. His residency status can be ROR also, RNOR also, NR also. It can be any residency status, but he is earning these incomes. Now identify that out of these incomes, which incomes will be included in the computation of his total income, if he is ROR, if he is ROR, if he is RNR, and based on that, compute his total income. Yes or no? But you are supposed to assume that he has exercised the option of shifting out of default tax regime. That means he is not following 115 BSE. 115 BSE default tax scheme he is not following. It is given in the question. See, if you are following 115 BSE, then there are certain exemptions, there are certain deductions which you don't get. But if you don't follow 115 BSE, you will get all the available exemptions and deductions. Everyone? So this question right now I am solving as if he is not following 115 BSE. Then what we will do? After solving this entire question, no, we will make the assumption that what if he would have, it would have been given that he is following 115 BSE. Then what would have been our answer? Where the changes would have come? Sure? Sure? Come on. First one. Interest on UK development bonds, 50% of interest received in India. 1 minute. UK means Uttarakhand. UK means Uttarakhand or United Kingdom. Means England. So the bonds of UK government will be issued by UK government only, no? So you have bought UK government bonds. And on those bonds, interest are coming. Can I say UK government is a foreign government? Foreign government bonds you have bought. On those bonds, if interest is coming, that interest is accrued outside India. How much interest is there? Come on, see. Total amount of interest. Total amount of interest is, friends, 10,000. Yes or no? So that entire 10,000 interest, can I say this is interest on UK development bonds? How much is the total interest, friends? 10,000. Now this interest is accrued outside India, no? The money which you have given will be used by the UK government outside India. And on that money, if you are getting interest, that money is accrued from that interest is accrued from outside India, no? Tell me yes or no, did you understand this much? So can I say this entire 10,000 is your income which is accrued outside India? Now they are saying that out of this 10,000 which was accrued outside India, 50% you are receiving in India. So out of this 50% received in India, meaning that balance 50% you must have received there only. That is received outside India only. Can you do 50-50 and tell me the amount? How much is the amount? 5,000 here and 5,000 here. Now one question. See, out of 10,000 which is accrued outside India, 10,000 which was accrued outside India, can I say this 5,000 is out of that 10,000 only? So the 5,000 which you are receiving in India, it was accrued outside India, but you have received in India, no? What type of income is this? Indian income. Hello, sir. Tick, tick, tick. Now the balance 5,000 which you are receiving, it is out of that income, no, which was accrued outside India. Out of that, you are receiving this 5,000 outside India only. So this 5,000 which was accrued outside India is also received outside India. Is it your Indian income or a foreign income? Foreign income. Part A or part B? Part B. Tick, cross, cross. But you cannot write like this in the exam, no? How you will present? Simple. Interest on UK development bonds. In the bracket only, you will write down accrued outside India. Next line, 50% received in India. How much? 5,000. All the three columns, 5,000, 5,000, 5,000. Done. Next line, 50% received outside India. First column 5,000, balance to column dash dash. Can you do it like this? Hello, sir. So how much out of this interest is taxed? Entire 10,000 will be taxed if you are ROR. Hello. For ROR, this 5 is also taxable and this 5 is also taxable, no? So if you are ROR, entire 10,000 will be taxed. But if you are RNOR or NR, no, only 5,000 which is received in India will be taxed. The 5,000 which is received outside India is your foreign income. For you to be RNOR or NR, it will not be taxable for you in India. So what will be the total in the column? 10,000, 5,000, 5,000. Please check. Please check the solution. Is it given 10,000, 5,000, 5,000? How is that 10,000, 5,000, 5,000? 5,000 received in India, 5,000 received outside India. My status is ROR. Entire 10,000 taxable. Hello. 5,000 received in India will be taxable only for me if my status is RNOR, not the 5,000 which I am receiving outside India. For both RNOR and NR. So for RNOR and NR, that 5,000 which is received outside India is kept outside. Only the 5,000 received in India is included in the computation of total income. Getting my point? Keep on checking the answers. Done? Next one. So what I can do here? Tell me. Out of this 5,000, tick, tick, tick. 5,000, tick, cross, cross. Sure? Next one. Income from business in Chennai. Oh, ayyo. 50% received in India, meaning that 50% received outside India. Same logic. Come on. Here. What is the income? Income is income from business, and that business is in Chennai, not China. Business is in Chennai, not China. Chennai is in India, by the way. If your business is in India, whatever income that business is giving, that income is accrued in India, no? How much income that business is giving you, macha? Tell me. That business is giving you 20,000 income, no? So can I say that business is giving you 20,000 income, that entire 20,000 is accrued in India? Entire 20,000 accrued in India? Now it does not make any difference that out of this 50% you are receiving in India, 50% receiving outside India, entire 20,000 will become your Indian income, no? Tell me, friends, out of this 50% received in India, meaning that 50% received outside India. So this 50% which you are receiving in India, meaning 10,000, accrued in India, received in India. Which income? Indian income. Take, take, take. The balance 10,000, even though, sorry, yes, balance 10,000, even though received outside India, but since it was accrued in India, Indian income, no? Tick, tick, tick. They are deliberately doing all those things to make you confuse. 50% received in India. Lady, what difference will it make? If the business is in India, entire income gets accrued in India, no? And if the entire income gets accrued in India, entire income is my Indian income. Take, take, take. Entire 20,000 taxable. And out of this, if I am receiving 50% in India, will not make any difference. 50% I am receiving outside India, will not make any difference. Whatever I receive in India is also accrued in India. Whatever I am receiving outside India was also accrued in India. So that entire amount is my income only, which will be taxable for me as what? Indian income. Sure. So how will you present this? Will you present like this in the statement? No. What you will do? Income from business in Chennai. What you will write in the bracket? Accrued in India. Then underline, below that write down 50% received in India. Below that write down 50% received outside India. 10,000, 10,000, 10,000, 10,000, 10,000, 10,000. Entire 2020 taxable, no? For all. Hello? Check the solution. In the solution 2020 given or not given? Done? Okay. Next one. Short-term capital gain on sale of shares of an Indian company received in London. Wait. Do you remember illustration number 5 we did? Illustration 5. Same point was there. Go and check. Shares of an Indian company sold and the amount was received in Germany. Now instead of Germany, where are you receiving? London. Will it make any difference? The nature of income is same, no? Deemed to accrue or arise in India. Section number 9. Everyone, what will you do? Come on. Tick, tick, tick. What you will do? Tick, tick, tick. And for this, for this 20,000 also what you will do? Tick, tick, tick. Earlier one 20,000 also tick, tick, tick. And this 20,000 also tick, tick, tick. Yes or no? Come on. Dividend from British company received in London. Wow. Entire dividend accrued outside India. Entire dividend received outside India. Which type of income? Indian income or foreign income? Foreign income. Part A or part B? Part B. What you will do? Tick, cross, cross. Next one. Long-term capital gain on sale of plant at Germany. Plant means what plant? That green color, giving you shade, taking carbon dioxide and giving up oxygen. English is a funny language. Plant means that plant also and plant means other plant also. Which plant they are talking? Plant and machinery. Asset. Where is the asset? Come on, tell me. Plant at Germany. Meaning where is the asset? Asset is in Germany. So the asset which is in Germany, you are selling that asset. By sale of that asset, the income is accruing from outside India, no? Hello, sir. But out of that, 50% you are receiving in India. So entire 40,000 accrued outside India. First of all, tell me yes or no. Entire 40,000 accrued outside India. But out of that, if 20 you have received in India, means 20 is your Indian income. The balance 20 was accrued outside India, received outside India, foreign income. Part A or part B? Part B. Tick, cross, cross. Hello, sir. Got it? So what you will do? 40,000 will do two parts. Out of 40, 20,000 which was accrued outside India was received in India. Hence it is Indian income. Tick, tick, tick. But out of 40, 20 is also accrued outside India only, no? And if nothing mentioned, this is received also outside India. Accrued outside India, received outside India. Which income? Foreign income. Part B, tick, cross, cross. See how easy the questions are. Any doubt, difficulty, problem? Tell me. Sure? Getting inside your head or going above your head? Inside or above? Inside, no? Sure, very good. Income earned from business in Germany. Business in Germany. So that business will give you income. That income is accrued outside India, no? How much income? 70. Entire 70,000 accrued outside India. Hello, sir. If the business is in Germany, from that business, whatever income you are earning, that income is accrued outside India. Entire 70 will accrue outside India. Now see, they are playing with you. They are telling you that this business is controlled from Delhi. And out of that, 40,000 is received in India. Wait, pay attention. Income from business in Germany amounting to 70,000. See, this business is in Germany, but this business is controlled from Delhi, means India. Yes or no? It is given in the question, no? Please pay attention. If the business is in Germany, no, for 2 minutes, forget that it is from where it is controlled. Where is business? Germany. And that business is giving me 70,000. Can I say 70,000 is accruing from outside India? So this 70,000 is entirely accrued outside India. Yes or no? Now out of this 70,000, 40,000 they are saying that you have received in India. Meaning that out of this 70, 30 you would have received there only, no? Hello? Received outside India only, no? So tell me, income from business which was accrued outside India, out of that 40 is received in India. This 40, even though accrued outside India, but since it is received in India, what type of income is this? Indian income. What you will do? Tick, tick, tick. Done. Now tell me, what about this 30,000? This 30 is accrued outside India as well as received outside India. Can I say this is a foreign income? But this foreign income is coming from a business which is outside India, but it is controlled from India. Tell me, which type of foreign income is this? A or B? A. So what you will do for this? You will tick, tick and cross. Understood? If that entire 70,000 would have been received there, no, on that entire 70,000 we would have done tick, tick, cross. But since from that 70, 40 we are receiving in India, no, that automatically becomes Indian income. We cannot do tick, tick, cross. We have to do tick, tick, tick on this 40,000. Sure? Next one. So, please make two parts over here. Out of this 70, 40,000, tick, tick, tick. And out of this 70, 30,000, tick, tick, cross. How will you write it in the answer? You will write income from business in Germany controlled from Delhi. In the bracket, you will write down accrued outside India. Next line, received in India, 40, 40, 40. Next line, received outside India, hello, 30, 30 dash. So for first two assessees, you will see 70, 70 taxable, and the last one you will see only 40 taxable. Please check the solutions. What they have done in the solution, we are separating the things, no? Then they are giving the total effects in the solution. Getting my point? Okay. Next one. Profits from business in Delhi. That's it. Don't read ahead. Where is business? Delhi. Meaning the business is in India. And that income, that business is giving you some income. That income will be definitely accrued in India, no? If the business is in India, that business giving you income, that business is accrued in India, no? So entire income which is accrued in India has to be taxable as your Indian income, no? Now what difference will it make that from where the business is getting managed? If the income would have been received outside India also, no, then also there is no difference because the income gets accrued in India. It becomes which income? Indian income, has to be taxed for all. You are not supposed to see that from where this business is getting managed. If the business would have been outside India, no, then check from where the business is getting managed from. Yes or no? But if the business is in India, whatever income that business will give you accrues from India only, no? So that is your Indian income. If you read the balance part of that point, no, you will get confused. Business is in Delhi. Business is in India. Whatever income that business will give me will accrue from India only. Yes or no? So it will become my Indian income. Tick, tick, tick. Everyone got this? Next one. Income from house property in London deposited in a bank at London brought to India bracket computed. Wait. This same to same point we have done in question number 5. Go and check question number 5. Illustration 5. There also the property was in London. Hello. The rent was deposited in London. So rent received outside India, rent accrued outside India. Hello. Which income? Foreign income, part B. Tick, cross, cross. So we are supposed to apply tick, cross, cross only. But there they had used the word rent. Please check. And here they are using the word what? Income from house property, and on top of that they are writing computed. Meaning that in that question we took 30% standard deduction separately because it was not computed income from house property. We computed the income of house property by taking 30% standard deduction. And here if you will take 30% standard deduction, you will be gone. Why? Because they have already taken 30% standard deduction and they are telling you the computed income is this. What we are supposed to do? We just have to pick up this amount and show it taxable only for ROR. Hello? But what if it was not computed? What if it was not computed? Here they would have given only income from house property and this computed word was not given. That means now it has two interpretations. Income from house property given is computed. Let us assume that. Then don't take 30% standard deduction. And if we assume that the income from house property, what they are wanting to say is rent from house property. And since they are not saying that it is computed, we will take 30% standard deduction. We will have to make an assumption. Yes or no? But here we are not supposed to make any assumption. They have told you that it is a computed income. Hello, sir. But what if it is not given that it is computed? We can take any of the assumptions. Yes or no? But which is the safest one? Since the rent word is not used, no, income from house property word is used, no, it is safe to assume that standard deduction has already been taken. It is computed one. We will not take separately, but provide a note for that. Getting my point? Next one. Interest on debentures in an Indian company. That's it. Which company debentures? Indian company. So Indian company has taken loan from you in the form of debenture and that Indian company will use that money in India. Indian company, by the way, is resident. Resident is taking a loan from you using in India. Hello. Always deemed to accrue or arise in India, no? Hello, sir. Indian company is a resident who has taken a loan from you and against that debentures are issued. Debenture is what? Loan instrument, no? So Indian company taken a loan from you, resident has taken a loan from you and on that loan, the resident is giving you what? Interest. Usually, any interest coming from resident is deemed to accrue or arise in India. But one exception, if the loan was used by that resident for a business or profession or source of income outside India, then it is not deemed to accrue or arise in India. But that is not the case over here. They are not saying that the money which they have taken as loan was used outside India. Are they saying it? No. So it is income which is deemed to accrue or arise in India. And moreover, they are saying that it was received in London. Oh, Amma, what if it is received in London? Will it make any difference? No. Because the entire amount is your income deemed to accrue or arise in India. Yes or no? So what you will do? Tick, tick, tick. Because this is covered by section number 9. Indian company is resident. Resident is giving you interest on loan. And nothing is mentioned that the resident has used that loan for a business, profession or source of income outside India. That means whatever interest coming from the resident is deemed to accrue or arise in India. Even if it is received outside India, will not make any difference. It is deemed to accrue or arise in India. Section number 9. Hello, sir. Next one. Fees for technical services rendered. Where technical services rendered in. That's it. And for that, whatever fees will be given will always be deemed to accrue or arise in India, even if coming from non-resident. Hello. So, wherever it is received, we are not worried because this is also deemed to accrue or arise in India. If it is given to a resident, if the resident is giving it to you, then also deemed to accrue or arise in India. Even if a non-resident giving this fees, then also it is deemed to accrue or arise in India because the technical services are rendered in India. And for that, if you are getting any FTS fees, that is always deemed to accrue or arise in India. No matter wherever it is received, it will be Indian income. Sure? Next one. Profits from business in Mumbai. That's it. Don't read ahead. Business in Mumbai. So where the income is accruing? India. Indian income. That's it. Now the business is managed from London. Manage from wherever you want to manage. We are not bothered about that. Understanding now? Next one. Income from property situated in Nepal received there. And they are saying computed. Wait. Property is situated in Nepal. Earlier the property was situated in London. Rent was received in London. Now the rent is received in Nepal. Property outside India. Income accrued outside India. Income received also outside India. What type of income? Foreign income. Part A or part B? Part B, no? Part B means tick, cross, cross. And you are not supposed to take 30% separately because they are saying that it is computed. Sure? Tick, cross, cross. And write down. This is what? This is a similar point. Connect. Both these points are similar points. Okay, no? Past foreign untaxed income brought to India during the previous year. Does it represent your current year's income or past year's income? Past year's income. So if past year's untaxed income you are bringing to India, this is not your current year income. This is not to be taken in your current year total income calculation. I told you in the note. So what you will do? Cross, cross, cross. For all of it, all types of assesses, this will be ignored. Income from agricultural land in Nepal. Agricultural land in Nepal giving you agricultural income. That agricultural income is not exempt. That is a taxable income. Yes or no? But it will be taxable for all if it is received entirely in India. But it is received there only. Received there. Please check. Where? Nepal. Accrued in Nepal, received in Nepal, foreign income, taxable only, no? Taxable for whom? For ROR only. RNOR, NR not taxable because this is foreign income part B. After receiving, you are bringing it in India, does not make this income received in India. Once you receive, then whatever happens is remittance. Getting my point? So you have received already outside India, no? So accrued outside India, received outside India, foreign income, tick, cross, cross. Because this is part B, foreign income. Done? Next point. Income from profession in Kenya, which was set up in India, received there but spent in India. Wait, no. Where you are spending it, I don't want to see. Tell me. Profession in Kenya means profession outside India. So from that profession, whatever income will come is accruing outside India. And they are saying that income is also received outside India. Meaning that income is received outside India, accrued outside India from a profession. So this is a foreign income from a profession which is outside India. Hello? But that profession was set up in India. So can I say this is part A, foreign income? Tick, tick, cross. Understood? So you will do tick, tick, cross. Sorry, tick, tick, cross. Done, everyone? Sure? Gift received on the occasion of wedding. On your wedding, whatever gifts you are getting, from relatives, from friends, from colleagues, from employer, anyone coming to your wedding and giving a gift is treated as a blessing. Is treated as a blessing. That gift is never charged to tax. That gift is out of the income tax net. And that is the reason why Marwadis and Gujaratis have lavish marriages. You won't believe. Marwadis and Gujaratis, why they spend huge amount of money and why they call all of their relatives, business associates and everyone in their marriages. Because marriages are the occasions when they take taxable amounts of their income as gifts and they get these gifts given to their children who are getting married. Seriously, this is a tax planning which happens. And there was one series also, Hindi series, I don't remember the name exactly, but in that series also, 200, 500 crores of rupees someone was supposed to receive. But there was a chartered accountant who was planning for him, planning for this millionaire, that don't take that 200, 500 crores of rupees as your income because it will be taxed. Your daughter is, is already matured now. So get your daughter married. And whoever wants to give you that income, no, don't tell them to give that thing to you as income. Tell them to give that amount as gifts to your daughter on the marriage, because any gift received on the occasion of marriage is not taxable. Whatever amount. Getting my point? But there was some robbery which happened in that. Some mismanagements happened, money siphoned off. So it was a good series which I saw. I don't remember the name exactly, but it happened. But what is the moral of the story? Moral of the story, any gift from anyone, money, assets, anything which you are receiving on the occasion of your wedding, wedding means marriage, will never be charged to tax. It will be out of the income tax net. Understanding? But what about wedding anniversary? Wedding happens once. Anniversary comes every year. So any wedding anniversary gift will be charged to tax, but not gift on wedding. Now there is a fashion. People are doing 2 to 3 weddings. Okay. So there is no restriction on the number of weddings. Okay. Do those many weddings which you want, which you can handle. If you are marrying for the second time, whatever gifts you will get on the occasion of your second marriage also, that will be exempt. Getting my point? So there is no restriction. But just for the sake of getting the gifts, nobody will break the first marriage and get married for the second time. No? Understand this. So what I want to tell you, there is no restriction on the amount of gift which you are receiving on the occasion of marriage. It will never be taxable. It will not be taxable for any type of assessee. Getting my point? And this thing we are going to discuss in detail when we are going to do gift provisions in IFOS head. Okay? That time also this point will come. Now this point, please mark this point important. Interest. Interest on saving bank deposit. Where is saving bank deposit? The deposit is in State Bank of India. State Bank of India is an Indian bank, no? So in any Indian bank, if you are having a savings account and in that savings account, whatever money you have put on that, you are getting interest. Can I say that interest is accruing from India? Is it your Indian income? Yes. So first of all, what we will do, tick, tick, tick. This is your Indian income. Now please pay attention. Please pay attention. See, if you are having savings deposit account, no, that savings deposit account you can keep with any bank also, or you can put a savings deposit account with a post office also. So if you are putting your money in a savings account in a bank, HDFC Bank, SBI Bank, ICICI Bank, whatever bank you are putting your savings account, money into savings account, yes or no? So any savings deposit account in any bank, on that, if interest is earned, yes or no, that interest entirely will be what? taxable. Entirely Indian income taxed. But for this, you will get deduction also under section. See, this will be taxed under the head income from other sources. So if this is your income, taxable for all. So where you will show it taxable? Income from other sources. And ultimately this will reflect in your GTI, gross total income. So in your gross total income, will you show 5 heads of income? Yes. So in 5 heads of income, in your gross total income, you will show IFOS head also, no? So in IFOS head, you are supposed to show this income as taxable. Got it? So if this interest is taxable, it is shown in IFOS and IFOS head is there in your GTI. So can I say in your GTI, you have included this interest income? Now, since in your GTI, you have included such kind of interest income, hence you will get a deduction under section 80TTA. So to get this 80TTA deduction from your GTI, first show this type of income in your GTI. So does your GTI include such income? Yes. Then from your GTI, this income will be allowed as a deduction under 80TTA to the extent of maximum 10,000 rupees. So how much interest you are earning? 12,000, no? So in the computation of your GTI, how much will you show? 12,000. So in your GTI, how much interest is included? 12,000. That interest will be allowed as a deduction under 80TTA, but not entirely because the limit is 10,000. Understanding? So first you will show this under IFOS at taxable for all. Hello? And all of them will be eligible to get the deduction under 80TTA. But what if you are not earning any interest income? If this interest income is not earned, so are you showing this income in your GTI? No. So you will not get any 80TTA deduction. To get the 80TTA deduction, what you are supposed to do? You are supposed to earn this income and show it taxable in your GTI. And whatever income you have shown taxable in your GTI, out of that, to the extent of 10,000, you can claim as deduction under 80TTA. Now, what if this income was only 8,000? So, how much you have shown as income? 8,000. So, how much deduction you will get? 8,000. Limit of deduction is 10,000 does not mean you will always get 10,000. If the interest taxable for you was 10,000 or less, then the entire interest up to 10,000 you can claim as a deduction under 80TTA. But if the interest taxable by you was more than 10,000, then entire amount you show, but claim only 10,000 from 80TTA. That's it. Got it? Everyone? Now pay attention. I'm talking about post office now. Can you keep a savings account in the post office? Sure, everyone. So whatever savings account you are keeping in a post office, on that savings account also you will get what? Interest. Now, out of this interest, up to 3,500 per annum will be exempt interest under section 1015. Meaning that whatever interest from the post office saving account comes, if that is 3,500 or less, entire amount exempt. Nothing will be taxable. Then, sure, if the post office savings account interest is more than 3,500, then 3,500 exempt. What about the excess interest? Is it exempt? No. So that excess interest will be taxable for you. ROR, RNOR, NR, anyone. It will be taxable for you. Under the head, income from other sources. Now, have you shown entire interest as a part of your GTI or only the excess over and above 3,500? Only the excess over and above 3,500. Yes or no? For example, your interest was 15,000. How much? 15,000. Out of that 3,500 you have taken as exempt, no? So how much remains now? Only 11,500 remains. That 11,500 you will show taxable under the head IFRS. Now, for the amount which is taxed and shown in your GTI, no, you can claim 80 TTA deduction. 80 TTA maximum how much? 10,000. What if you are having only this interest, only this? Then treatment is this. Getting my point? First taxable, then take 80 TTA deduction, maximum 10,000. What if you are having only this interest, only this? Post office. Then first 3,500 fully exempt. Out of that, balance remains, excess remains, that excess will be taxable and that excess can also be taken as a deduction under 80 TTA. So first take the exemption and whatever balance remains that you show taxable and claim 80 TTA deduction. If only this interest is there. What if both interests are given in the question? So savings account in bank, that interest will be fully taxable under IFRS. Hello. Post office interest, take 3,500 exemption. Hello. Whatever excess remain that you show under IFRS. So your IFRS will have now both these interests. Add both of them. That entire interest which you are showing in IFRS will be allowed as a deduction under 80 TTA subject to maximum 10,000. That 10,000 is not separate for both the interest. That is for total which are showing taxable under IFRS. Sure, everyone understood? Sure, no? Don't worry, this part will again come when we will be doing total income calculation, GTI calculation, tax liability, deductions and all. Getting my point? In IFRS also, I will also tell you that this point I have already discussed in the first chapter. You have to remember at that time. Will you? Okay. Perfect. See, now income from business in Russia. Where is the business? Russia. That's it. Income accruing outside India. Are they saying that this income is received in India? No. That means the income is also received outside India. So income accrued outside India, received outside India from a business which is outside India. Is that business controlled from India? No. So it is a foreign income, but not part A foreign income, part B foreign income. What you will do, friends? Tick, cross, cross. If the business would have been controlled from India, no, then it would have been tick, tick, cross. Done? Next one, dividend from Reliance Petroleum Limited, Indian company. Is this dividend received outside India? No. So it would have been received in India only. Indian income accrued in India, received in India. No need to deem also. If this dividend would have been received outside India, then also Indian income. But this time it will be deemed to accrue or arise in India. Yes or no? So this is Indian income, tick, tick, tick. This time what you will write? Deemed to accrue? No. You have to write accrued in India, received in India, Indian income. Done? Next one. Agriculture income from land in Rajasthan. Where is the land? India. Any land in India giving you agricultural income, is that agricultural income taxable or exempt? Fully exempt. 10 subsection 1, fully exempt, cross, cross, cross. We have solved the entire question. Now you have to do the presentation at home. Will you be able to do it or not? Comment the answer in Y or N. Perfect. Question number 3 from your practice questions. Mr. Ramesh and Mr. Suresh are brothers. They earned following incomes during the financial year 2024-25. Mr. Ramesh settled in Canada in the year 1996 and Mr. Suresh settled in Delhi. Meaning that since 1996, Ramesh is in Canada only. He settled there. And since that time only, Suresh is settled in India, in Delhi. If nothing is mentioned regarding their stay in India, outside India, during the previous year 24-25, what we are going to assume that Ramesh, who has settled in Canada, is still there only. He has not come for a single day in India during 24-25. And at the same time, we'll assume that Suresh, who is there in India since 1996, he is there in India for the full year in 24-25. Meaning that the residency status of Ramesh would be non-resident in this year, and the residency status of Suresh for this year will be ROR. Because since 1996 he is there in India. This year also full year he is in India. Meaning that he is ROR. Since 1996 onwards, Ramesh is outside only and he has not come to India for a single day. Hence he is a non-resident. So we got the residency status for both the brothers. Yes or no? So what will be the residency status for Ramesh? Come on, tell me. It will be NR. And what will be for Suresh? It will be ROR. Okay. Now we are supposed to look at these incomes which they are earning during the previous year 24-25, and based on their residency status which we have just now determined, we are supposed to say that whether these incomes are taxable for them in India or not. See, as far as Ramesh is concerned, whose residency status is non-resident, all the incomes which are Indian incomes will be taxable for him. All the incomes which are foreign incomes, either part A or part B, will not be taxable for Ramesh. Yes or no? And about Suresh, all the incomes, whether Indian incomes or foreign incomes, part A or part B, will be taxable for Suresh. Yes or no? Okay. Now, see, compute the total income. They are telling you to compute the total income for assessment year 25-26, assuming both have exercised the option of shifting out of the default tax regime. Meaning that they have shifted out of default tax regime, meaning they are following the normal tax system. Yes or no? Now, interest on Canada development bonds, only 50% interest received in India. Yesterday, we did UK development bond. Today, they are saying that this is Canada development bond. The same thing is given, but instead of one country, now they have changed the name of the country. The treatment remains same which we gave yesterday. Come on, tell me, the entire interest will accrue in Canada. But out of that, if 50% is received in India, that is Indian income, tick, tick, tick. Okay? Meaning that will be taxable for non-resident as well as ROR. That will be taxable for Ramesh also as well as Suresh. 50%, the part which is received in India. The part which is received outside India, that means out of the entire interest, half interest which is received outside India, that is accrued outside India, received outside India, that is a foreign income, will not be taxable for non-resident, but that will be taxable for resident. So if I say that out of the total 35,000, half is received in India, half is received outside India, the half which is received in India will only be taxable for Ramesh because his status is non-resident. Yes or no? So what we will be doing here, out of this 35,000, we will be charging only 17,500 taxable in the hands of Ramesh. Okay. Now as far as Suresh is concerned, out of 40, the 20 which he is receiving in India and the 20 which he is receiving outside India, irrespective of that fact, that entire 40 will be taxable for Suresh because his residential status is ROR. Understanding? Sure? Okay. Now, the first part is done. So, first income is taxable for both, but only half taxable for Ramesh and full taxable for Suresh. Next one, dividend from British company received in London. Now, tell me, this is also a foreign income. Part B, foreign income, not taxable if you are a non-resident. So I will cut this part. But it will be taxable if you are ROR. Because for ROR, even part A as well as part B foreign incomes are taxable. Yes or no? So this entire 40 will be taxable. This entire 20 will be taxable in the hands of Suresh. Next one, profits from a business in Nagpur. Nagpur is a place. It is a town in India. So if your business is in India, from that business, whatever income you are earning, don't you think that is accrued in India? That is Indian income. Now, what difference does it make that it is managed from London or wherever it is managed from? We don't mind as far as the business is in India. Entire income is accrued in India. Entire income is Indian income. It will be taxable for non-resident also. It will be taxable for ROR also. Yes or no? So this will be taxable. This will be taxable. Yes or no? Next one. Short-term capital gain on sale of shares of an Indian company received in India. Wow, wonderful. The shares of an Indian company you are selling in India and the gain also you are receiving in India. What if you would have received this gain outside India? Then also it would have been your Indian income because that time it would be your deemed to accrue or arise in India, section number 9 income. Yes or no? But right now, the income is accrued also in India, received also in India. It is your Indian income, taxable if you are NR also, taxable if you are ROR also. Done? Next one. Income from business in Chennai. Very good. Accrued in India. This is your Indian income, taxable, taxable. Next one. Fees for technical services rendered in India but received in Canada. Where the technical services were rendered? It was rendered in India. And for any technical services which are rendered in India, whatever fees you are receiving, that is deemed to accrue or arise in India if it is received outside India. Yes or no? So section number 9 says that this is your Indian income deemed to accrue or arise in India, taxable for non-resident, as well as ROR. But ROR is not earning that income, so it will be taxable in the hands of Ramesh. Yes or no? Next one. Now, interest on savings bank deposit in UCO Bank, Delhi. Hello. Do you remember yesterday I told you one small chart? Savings account in a bank in India will give you interest. That is your Indian income. First of all, it is taxable. Then later on, up to 10,000 of that amount you can claim as a deduction under 80 TTA. Understanding? So first what we will do, we will charge it taxable. Then for this, we will claim 80 TTA deduction from the GTI. That 80 TTA deduction will be available for both. But for Ramesh, it will be entire 7,000 allowed under 80 TTA because that is within the limit of 10,000. But for Suresh, it will be allowed to the extent of 10,000 only. Getting my point? Everyone? Okay. Now, agricultural income from land situated in Andhra Pradesh. Andhra Pradesh means the land situated in India. This agricultural income is fully exempt under section 10(1), will not be taxable in the hands of both. Neither in the hands of Ramesh nor in the hands of Suresh. Rent received in respect of house property at Bhopal. Wait. What they are saying? They are saying rent. They are saying rent. Rent means this is income which will be taxable under the head house property. But from that, we are supposed to take 30% standard deduction also. They are not saying that this is computed income under the head house property. So we are supposed to take 30% standard deduction. And then whatever balance remains, that balance will be fully taxable because the property is situated in India. This is Indian income. It will be taxable for both. So what I will do, I take 30% standard deduction from here and this amount will be 70,000. And I take 30% standard deduction from here, this will be 42,000. Yes or no? So this 70 will also be taxable, this 42 will also be taxable. Yes or no? Next one, life insurance premium. See what happens now. Whenever you pay life insurance premium, that is not something which is coming to you. This is your expense. So whenever you pay your life insurance premium, for that premium, you usually get deduction under section 80C. So there is one section 80C. Under that 80C, you are going to get the deduction for this life insurance premium paid. But that 80C deduction you will be claiming after calculating your GTI. So first calculate your GTI. From that GTI, now you will get two deduction. One, under section 80C, you will get this deduction for life insurance premium, and 80 TTA, you will get the deduction for interest on savings deposit account. Yes. So for this, we will take 80C deduction. Now very easy. What we are supposed to do? We are supposed to make a table, particulars. Then in that we'll write Ramesh and we'll write the status there only, non-resident. And another column, Suresh, will write the status ROR only. And now one by one we'll start writing the incomes. First income, accrued outside India, underline. Received in India, next line, received outside India. Received in India, 17,500. And here 20,000. Next one, received outside India dash, because Ramesh is non-resident, that 17,500 is not taxable. And for Suresh, the another 20,000 which is received outside India will be taxable for him. So what will be the total income total of these two interest taxable for Suresh? It will be 20 plus 20, 40. And what will be for Suresh? It will be 17,500 plus 0, it will be 17,500. Likewise, you are supposed to present. Got it? Sure? Now, second one, dividend from British company. You will write down accrued outside India and received outside India. First column dash, second column 20,000. Likewise, you are supposed to write down all the incomes which are taxable. Don't write those incomes which are not taxable. Put a dash. Now first one, tell me what will be the total income of Ramesh? 17,500 plus you don't add 28,000. Okay. Premium is not to be included, no Akshay? Premium is paid, no? See, it is only about interest income which you are earning. You show it taxable and then take the deduction. Two effects. But for premium, it is your payment only, no? So take the deduction only, that's it. Understood? Next one. See, 17,500 plus don't add 28,000, then add 1 lakh, then add 60,000, then add 80,000, then add 1 lakh, then you will add 7,000, then don't add 55,000, add 70,000, then you will get a total of 4,34,500. First column, 4,34,500. So can I say here the gross total income for Ramesh, it is 4,34,500. And what will be the gross total income for Suresh? Come on, check. 40,000 plus 20,000 plus 1,40,000 plus 90,000 plus 70,000 plus 12,000 plus don't add 45,000. Okay, then add 42,000. You will get 4,14,000. So did you get 4,14,000? Okay. Now this is your GTI, gross total income. Out of that you will get deduction under chapter 6A. First deduction which you are going to get will be 80C. That is for life insurance premium. Who is paying life insurance premium? Ramesh or Suresh? Only Suresh. So Suresh will get the deduction out of his GTI. Yes or no? So for Ramesh we will put a dash. And for Suresh, what we will do, we will take 30,000 deduction for life insurance premium. Another 80 TTA. That is what? Interest on savings account. What was for Ramesh? It was 7,000. 7,000 shown as income and now 7,000 taken as a deduction. Okay. And for Suresh, how much was the interest? 12,000. 12,000 included. But we will not take the deduction of 12,000 because 80 TTA maximum limit only is 10,000. Yes or no? So we'll take 10,000 over here. Now what you will do? 4,14,000 minus 30,000 minus 10,000. You will get 3,74,000 here. And 4,34,500 minus 7,000. You will get 4,27,500 here. This is the total income for both the brothers. Done everyone? Easy? Very easy question. But it was important. Mark this question important. And please pay attention. See, this kind of question they can ask you in exam. And if such question comes, no, trust me, it will be for minimum 6 marks. What they will do? See, in this question, no, they have not told you to determine the residential status. At the most, what difficulty level they can give you in the exam, I'll tell you. They will give the number of days stay of Ramesh also and number of days stay in India for Suresh also. They will tell you that Ramesh was outside, he came to India on this date, he left on this date. Okay, Suresh was already in India, he left India, then again came back to India. They will make you determine their residential status by giving some number of days, so that this residential status part become a little bit more difficult for you. Then at the most what they can do, in this same type of question, they can twist few incomes out of this. We have solved a very difficult question, a question which was difficult than this. Yes or no? What they will do? They will they will take 2-3 adjustments from that question and they will put it here and remove 1 or 2 from here. Mix and match, new question created. Concept remains same, no? Conceptually, if you are clear, no, what they are trying to ask you, you will be always able to solve the questions. Don't worry about it. But the confidence will come only if you solve the maximum questions. And you have this mindset that, okay, What if in this question they are trying to do like this? What if in this question they are trying to do like that? You should have that kind of mindset. Only then you will, think. And only then when the new type of question will come in the exam. No, see, I will solve 500 questions with you in class. For example, you are going to definitely see 501st new question in the exam. This will not be exactly the same question which we are solving. But they will try to mix and match 2-3 questions. But all the questions you have solved, similar type of questions, they will mix and match and they will try to create a new question for you. And people get afraid, students usually get afraid. Oh my God, what happened? What type of question they have asked? Sir, we are not able to solve. If you are conceptually not strong, if you have not studied the concepts properly, and if you have not practiced the question, no, trust me, you will not be able to solve a single question in the exams. And that is what, many students face as a difficulty. And I don't want you all to face that difficulty. The moment you are sitting in the exam, no, you are confidently going in the exam, sitting there, and my voice is echoing in your ears. That, okay, sir is telling all these things. Sir is, dictating the answers and we are writing. That should be the level of confidence. And that will be built only if you are attentive and do the things which I am telling you to do religiously. Okay. So this was your question number 3. Now we are going to solve question number 5. Okay. See, this is a simple question. In this question, they are telling you that, see, this is your income. Tell us whether this income is taxable for you or not. If taxable, then how much amount is taxable and what is the reason for taxability? If not taxable, then why it is not taxable? Give the reason. In this question, we are supposed to answer like this. Understood? See, examine with reasons. They are saying examine with reasons. You are supposed to give the reasons also. Whether the following transactions attract income tax in India. That means whether the transactions are taxable incomes or not. In the hands of recipient. Salary payable by the central government to Mr. John, a citizen of India, rupees 7 lakhs for the services rendered outside India, considering that he pays tax as per the provisions of 115 BSE. Wait, no. In the last question, come to the last question first. In the last question, they were telling you that he has shifted out of 115 BSE. Now, you should have one doubt in your mind. What if in the same question, if they are saying that not shifted out of 115 BSE, following 115 BSE, then that deduction of ATC and ATTTA we took now will not be available. And accordingly, what will be your total income? Total income will be this much only without taking the deductions. Because when you follow 115 BSE, there are many deductions and many exemptions which they take away from you. Out of all those deductions and exemptions, ATC and ATTTA is also there. All the chapter 6 deductions are gone. You will not be allowed any deduction. So is it better for us? No. Why? Because if we are able to get the deduction and reduce our total income, so it is always better to pay tax on a lower total income, no, rather than paying a tax on higher total income. Yes or no? But if you follow 115 BSE, these deductions will go away from your hands. And whatever gross total income was there, that will only become your total income now. And on that you will have to pay tax. And even if the rates are concessional, there will not be much benefit for you. Getting my point? In that same question, they can ask you like this. One more question we solved earlier, last lecture. In that question also they had said that 115 BSE is not followed. Then your answer is there. What if 115 BSE is followed there? There also ATTTA deduction will not be available. And that case, the standard deduction and everything, that will be okay. So as and when we'll move with the, chapters, in the chapters only, I, keep on telling you, see, we are doing this deduction, we are doing this, we are doing that. Wait, this deduction will not be available if you follow 115 BSE. That time only I will tell you. So that along with the chapters only, we are learning that what is applicable under 115 BSE in this chapter and what is not applicable if we follow 115 BSE. Yes or no? Otherwise, the entire chapter will be solved as if we are not following 115 BSE. Entire chapter will be done as if we are not following 115 BSE. But what if we follow 115 BSE? What changes will be there in this chapter? Chapter wise, I will keep on telling you. And once we are into the tax rates now, in the tax rates, we'll be going to discuss the tax rates of 115 BSE now. That time when I will show you 115 BSE, you will say, sir, we have already studied all these things with the chapters. It will be just a, exercise of reading all those things. That's it. Got it? So let's come to question number 5. What if you are following 115 BSE? Shifted out, not, yes, considering to pay tax as per the provisions of 115 BSE. I told you yesterday, if you are earning salary for rendering services outside India as an Indian citizen and that salary is given by government, what will happen? That salary will be deemed to occur or arise in India, will be taxable for you. So can I say Indian citizen John, the salary will be taxable? Yes or no? If the question is silent, no, Akshaya, if the question is silent, no, by default 115 BSE is applicable, by default, because that is a default tax scheme, no? But don't worry, they are not going to put you in suspense like this. Majority of the questions, they will tell you only that 115 BSE opted or opted out. They will tell you. Okay? Next one. See. So here, can I say this 7 lakh is taxable? But don't you think that this 7 lakh is salary? It will be taxable under the head salary. So from that, salary head final income needs to be calculated. So to calculate that salary head final income, we are supposed to take standard deduction also out of this salary, because this is not salary computed, this is salary paid. Salary paid will be shown under salary head. From there you will take the deduction, standard deduction, then you will get salary computed. Yes or no? So we are supposed to calculate salary computed. So how will we be able to do it? We are supposed to take the standard deduction out of this. Whatever remains will be treated as our salary computed. Yes or no? So how much will be the standard deduction? If you follow 115 BSE, then under the head salary, your standard deduction will be 75,000. But if you don't follow 115 BSE, under the salary head, your standard deduction will still be there, but it will be only 50,000. So tell me how much standard deduction you will get? 75,000, because he is following what? 115 BSE. So out of 7 lakh, can I say 75,000 standard deduction is taken? 6 lakh. 25,000 will be the taxable income. Yes or no? So what reason you will give? You will give that this income is covered by section number 9. It is deemed to occur or arise in India, hence it is taxable. But we are taxing it after taking standard deduction 75,000 because he is following 115 BSE. That answer you are supposed to write in your own language. Okay. Go and check the solution. In the solution you will get the same answer. Taxable 6,25,000, and the reason will be same which we have discussed now. Okay. Next one. Interest on monies borrowed from outside India 5 lakh by a non-resident for purpose of business within India, say at Mumbai. Wait. You are an assessee. Okay. Interest on money borrowed from outside India by a non-resident. Money borrowed outside India by a non-resident. So who is borrowing money from you? Non-resident is borrowing money from you. Who is outside? So on that borrowing, he is giving you interest. But that borrowing, that loan, he is using to do a business in India. So is that non-resident using your money in India? Yes. And on that money, if he is giving you interest, don't you think even if it is coming from non-resident, it is deemed to occur or arise in India? It is your Indian income. So it will be taxable because this is also covered by section number 9, deemed to occur or arise in India. How much is the answer? 5 lakh. Please check. Please check the answer. 5 lakh is taxable or not? Sure. Next one. Post office. Now see, yesterday only, we did one chart. In that chart I showed, wait, I'll show you that chart. Do you remember this chart we did yesterday? Savings deposit account, if in a post office you are having a savings deposit account, from that savings deposit account, whatever interest you are earning, up to 3,500, it is exempt under section 1015. So tell me how much post office interest you are earning? You are earning 19,000. So out of that 19,000, first 3,500 will be exempted. So how much remains? 19,000 minus 3,500, 15,500 remains. That 15,500 is taxable. But don't you think that 15,500 will be taxable under the head IFOS, will be ultimately shown as a part of your GTI, and for that you will get deduction under 80 TTA up to 10,000. So out of this 15,500, 10,000 will be allowed under 80 TTA. So how much will remain now? Only 5,500. So ultimate final amount which will be taxable in the hands of the assessee will be 5,500. How did you arrive at? See, out of 19,000 interest, 19,000, some interest was exempted under section 1015 amounting to 3,500. Yes or no? So you will get 15,500. This is taxable amount, and out of that, after considering 80 TTA deduction amounting to 10,000, whatever remains 5,500 will only be taxable final amount, and this will be taxable in the hands of all types of assessee, whether the assessee is ROR, RNOR or NR. Okay, next one. Royalty paid by resident to a non-resident in respect of a business carried outside India. Wait. You are an assessee. You are a non-resident. Royalty paid by a resident to non-resident. So you are a non-resident. You are receiving royalty from a resident. Usually it is deemed to accrue or arise in India. But one exception was there. If the royalty is received from a resident, and if it is for a business outside India, then the royalty, even if coming from resident, will not be deemed to accrue or arise in India. So this is not deemed to accrue or arise in India. Hence, this will not be taxable. Because if it is paid to non-resident outside India, so for non-resident, this is not deemed to accrue or arise in India. This is accrued outside India because it was for a business which was outside India. For example, some patent etc. is used for a business outside India, and on that patent, whatever royalty is coming, that royalty is accruing from outside India, and non-resident is receiving that outside India. So for non-resident, accrued outside India, received outside India is a foreign income, no? Will it be taxable or not taxable? Not taxable. In the hands of non-resident, this will not be taxable because it is accrued also outside India, received also outside India. This is not deemed to accrue or arise in India. Done? Next one. Legal charges 5 lakh paid in Delhi. Done. Paid in Delhi. So whoever getting that legal charges, he is getting that legal charges in India, receiving that legal charges in India. So for him, that legal charges is what? Indian income, because receipt happens in India, that receipt and Indian income. Done? So tell me, lawyer of United Kingdom visited India to represent a case at Delhi High Court. See, if you are representing a case at Delhi High Court, that means as a lawyer you are rendering your services in India. And for those services which you are rendering in India, the legal charges are accruing in India, and on top of that, it is received also in India. What type of income it is? Indian income. So even if that lawyer is from United Kingdom, even if his status is non-resident, will not make any difference because that lawyer is earning this income from India, also receiving in India. For that lawyer, this income is Indian income. What will be the answer? Taxable. How much amount will be taxable? Entire 5 lakhs will be taxable. Got it? So these type of questions can come in the exam. Please be very careful. Okay? And these kind of questions, the small parts like this can come in the main answer also. Main question also as an adjustment. Or it can be framed as an MCQ. Done? So with this, the chapter is over.